Hey, well, good morning, active traders, or good afternoon, as the case may be. I'm good to see you all here. Just doing a quick check here. It looks like everything's working. So, good afternoon, active traders, and welcome aboard to our live event here. You see a big turnout. A lot of people registered. Let me know, can everybody hear and see the video and the charts okay? Just doing a quick audio visual check. See if you're doing good. Hey, thanks, Randy. Well, good to see some familiar faces. We've got lots of great charts here today. RGTI, that's a really nice one. Ran all the way from 11.5 to 12 all day long, right? This is a good candidate for what I call an intraday swing. That's where you put on the trade early, whether it's on a breakout or a pivot, and just once it opens up, put a hard stop on it right below the day's low, and just step away. And don't look at it until the end of the day, till 3:30 actually, at which time you tighten up a trail stop and take the profit and the close. So just a few minutes left till end of day. S&P has been really strong today, right? Lifting up nicely. An expansion of the range, right? It's another thing to look at is an expanded range day over day. So yesterday, I should say, yesterday compared to today, a narrower trading range. So bigger range today than yesterday, which is a very bullish sign, right? As we know. I like trading the Tesla long and short ETF instruments. I don't know if you guys trade those or not. All right, well, good to see folks here. We'll be getting underway here in just a few minutes at the hour in about 7 minutes. So I usually don't, well, I never go first normally, but I was holding out to see if I could get a keynote speaker. And we'll be doing those throughout the year. We're going to be doing these half-hour speaker formats as we've been doing for years throughout the year, and actually going to be ramping them up because there's been so many new people that have been interested in them, and a lot of speakers who want to speak and traders want to get taught. So I will be expanding these, and the plan is to do at least one a month and maybe two. So we'll look for these continuously throughout the year, and great to have you all here. I think it's a good idea, if nothing else, for you to get acquainted with some of the different speakers out there and see if they have training that you think would be helpful. Just like any college or university, and you've got some professors that people like, different people like different teachers. And so I thought it'd be good to present a variety of the world's top people who teach trading to y'all and to be of service, right? But that's the best chart so far lately, into the close, right? RGTI. Forgetting computing. Now, stock sales has been kind of a laggard today compared to how it normally runs with the S&P. But I always like trading SOX S. I do pair trading versus SOX S versus SOX L. When one goes up, the other goes down. So you trade the breakout on one until it turns red, and you flip into the other one that's green at that time, right? And ride that on the way up. So it's an advanced strategy that I've traded many, many hundreds of times. So and this is a good chart in RGTI. Well, we'll be getting underway here soon in just a few minutes. Arizona iced tea of choice. Back when I founded Day Trading University in Honolulu, I'd always get one of those when I was out at the beach in Kailua Beach, right? So my favorite beach in the world, Kailua Beach, over on the windward side near Makapu'u. I don't know if anyone's been there, but Calhoun Beach, one of the top 10 beaches in the world. And I used to go there and do my strategic planning with the laptop and get the tea and a rice mat and sit down there and meet the women and plan the business. So keeping busy. And one of the things that traders tend to struggle with is scanning and trying to figure out what's the difference between charts that are likely to run versus those that don't. The answer is simply all about price action and trade management or risk management. What doesn't matter is things like squiggly lines. It's a moving average crossover. Who cares? That's a historical data point. What all that matters is the markets pivot so often, that'll stop you out. You need to focus on things like increasing ranges, increasing volume, the fundamental things that make for a foundation of a good trade. So it's always helpful to know what to pay attention to and what not to. Well, we've got a small turnout so far. We'll get the numbers up here momentarily. The market is still in effect, and S&P looks to be closing strong, eh? One technique that I discovered that may be of help to you is to look at the difference to do more of versus less of in your trades. And you want to do more of and being selective on the specific charts and the timing. It's really important. And one of my other speakers, Anka, I think, was very smart about that. Timing of day, time of day, length of time of the trade. All that's very important in addition to simple price action breakouts. So things like risk management and figuring out, in addition to what's obvious, it's the what's not so obvious that's hidden under the surface and that'll do well for you if you know what to look for. So we'll be starting here in just about 3 minutes, and good to see traders from around the world. It was nice to see a big group of folks. To our agenda, we've got, I don't do PowerPoint anymore. We've got me, then Norm, then Steve Primo, then Dan Passarelli, Anka Metcalf, Steve Nison, Mark Leibovit, all respected people. And so hopefully we'll have another great session. I really enjoy doing these because it gives me a nice chance to bring good people in front of you folks, good people. So always nice to have a roster of fellow speakers and colleagues that know their stuff that can help you. So a lot of familiar faces here too. So good to see a lot of you come back. This is a great chart. It's a nice 45-degree angle breakout. That's my favorite chart pattern. You can see it's doing really well. It took out the previous high here, so that's encouraging, and we'll see if it closes strong. So let's say you're intraday trading this, or even swing trading this, and you're in the money. Okay, you're up in the money. That's good. Take the money and run is my strategy in the markets. When you're in the money, take the money, or at least take some off the table and tighten up a trailing stop. You make a call. Where would you trail a stop on this if you're day trading? I'm very curious to see your answers. Hey, Randy, the lineup is at americastoptraders.com. americastoptraders.com. One of my many sites. Again, there's the lineup for today. So anyway, I'm sorry, not obscure the chart. So where would you folks trail a stop on this? Yeah, sure thing, man. Let's hear day trading. Where would you trail a stop on this? Hint, the more professional you are, the tighter the stop's going to be. The more sucky you are as a trader, the wider the stop's going to be. Oh, it's like a major support down at 11. No, Sparky. You want to take every nickel off the plate of Wall Street you can. So let's see some answers. Where would you guys trail a stop? There's no necessarily right or wrong answers. There's smart and not so smart answers, but where would you trail a stop? Hint, it's somewhere over 1180. But if you're intraday trading this, you bought it down here, where would you trail a stop? You got 30 seconds left till the bell, right? Closing bell. Let's see, you'll answer. All right. All right, well, let's go ahead and get started with today's live event. In just a few seconds, I'm a stickler for detail. We're not quite there yet. Really good, strong chart today. All right, well, hello, active traders, and welcome to our America's Top Traders event for today, February the 13th, 2025. I'm Ken Calhoun, your host, president of the original Day Trading University from back in 1999. Today, we've got myself leading off with Norm Hallett from 4:30 to 5, then Stephen Primo, Dan Passarelli, Anka Metcalf, Steve Nison, and Mark Leibovit. All really smart people, and looking forward to hearing what they have to say in today's event. So we're going to take a look at live charts. I don't use PowerPoint. I'm a trader, so I just use the charts. One thing you want to start off is always look at the underlying index and see what the directional volatility is. The direction vol. Are we up? Are we down? Are we sideways? What's the range look like compared to previous day's ranges? We've got an expanding range breakout up in new highs, and we're right under the 610, which is a major resistance area. We've got a really bullish market, so that's good. And within that market, there's good opportunities for things like SOXL, RGTI, a nice 45-degree angle breakout, and more. That's day trading. We're looking for charts that have good volatility and directional strength that's consistent. One thing you may want to do is when you're scanning for charts, remember the stupid way to day trade is to scalp cheap charts under $5 with thousands of shares. That's how you blow up your account. I inherit so many people from these misleading wannabe newbie day trading instructors that have been, they're in kindergarten when I was day trading. The right way to trade is things that have big ranges that are still inexpensive. Between like $8 and $30 is my sweet spot. Usually $15, $20, $30 stocks are great with a 1.5 to 2 point trading range with at least 1 million shares a day or 15,000 shares a minute volume. So you have liquid, wide volume charts that are easy to trade. You don't want to scalp thousands of shares on cheap charts because you can lose a lot of money right off the bat. And most traders who try that scalping approach fail miserably, even though the person running the room seems to magically make it work. It's a bunch of BS and it's smoke and mirrors. The truth is, it's very difficult to trade. The good truth about trading too is you will lose more than you win for the rest of your life. Okay? Bum, 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 bum. My most profitable year in real money trading, I was 72% wrong. 72% of my trades were stop losses. The remaining 28% were wins. But guess what? The wins added up to be bigger than all the stop losses. Like my colleague, the brilliant Tom Sosnoff from Tasty Trade says, trade small, trade often. And that's exactly right. You want to chip away at the market. You put together sequences of trades. You never put on a single trade. That is stupid. I used to do that. It doesn't work. You look for a magic indicator. No, it's going there, so let me bet a lot. And then it stops out. You go, oh, why did that happen? In the book, it looked like it worked out. No, it's a random market. It's a random market. It's very random. It's quite random, as we all know the hard way. So all that we have is our risk management. So all you have is tiny stops. That's the key, or break-even stops are better. Like I coach my traders in the live room. Once something goes up, 20, 30 cents, we move the stop loss to break even. So you're playing with the house's money. I won't say you're bulletproof, but pretty dang close. And that's an intelligent way to trade. If we're looking at the, say, swing trading chart, let's tighten up. There's so many charts that have done so well. One of the things you want to look at is the charts that have the most consistency. What was that one? PLTN? I think it was Pelotron. Somebody remind me. PLTN or no, it's not PL. Palantir, was that PLTR? That was a monster chart, right? That's the best swing trading chart in the universe, in my humble opinion. Going from a low of 25 or so, my brilliant trader, one of my brilliant traders had mentioned it right here, around 30. And I called the long for my traders after this gap around 30. I think we got in late around 32 was a long call for a swing trade. Now I'm not patient enough to hold stuff for 6 months, but usually 3 or 4 weeks is my stretch point. But this thing ran all the way from 20 up to 100. Those are the kind of rock star charts you want to put in your portfolio for either swing trading or longer term, 5 or 6 month trades. Hey, good to see you. Wow, we got a big turnout so far. Good. Hello, everybody. Good to see you all here. Anyway, that's the kind of chart you want to go for. A nice long chart that you can keep scaling into periodically. Remember, one of the things that you want to look at is, as a trader, is figuring out how to make the numbers work out, the math workouts that you make profitable trading decisions. And it's all about the momentum and price action, tight stops, and position sizing or scaling. Okay, so that's some of the things we look at. What else can I tell you? There's so much. So little time, so many things to teach. You go through like a random list of gainers. Well, one thing that always amazes me is when I ask traders, give me charts of your charts. And do that today. Go ahead and post a couple of tickers you want me to pull up. for either swing or day trading, and tell me if it's for day or swing trading. And a lot of y'all pick really stupid charts that wouldn't ever make any money, and you wonder why we lose money. You have to trade smart charts that are intelligent. This is a smart chart, right? When it doubled, right? It's a doubler from 24 to 50 last 4 weeks. That would be an intelligent chart to trade, especially since it has a really big green candle here. It looks like a lot of people are buying it. So somewhere north of 60 may make sense for breakout in this chart. 45-degree angle breakout and a spike. That's what I call, and you may have seen my article in Stocks and Commodities called an acceleration ramp. It goes like this and then it spikes up like that. Okay, that's important. That's a good chart. Now you don't buy up here. You wait till a pullback and then you buy above the pullback breakout. And that's another quick tip. A secret to success in trading. You have my word on this. I've traded over $120 million worth of order flow year before last. I'm a baller trader. I really trade a lot with tax return proof. I'm sorry, 1099 from Fidelity Proof on my website. It's kind of helpful to learn from those of us who actually are real traders with tax return proof or 1099s from our brokers. Anyway, point is, something goes up, you don't just buy it because it's going up. That's really stupid. You'll lose your butt doing that. You wait till it comes down. You don't buy it there because it may just keep going down. You wait till it recovers and then pokes its head up. Then that's where you hit it. Headshot. Call of Duty. You want to trade it after it breaks out, pulls back, and then has a new secondary wave of buyers taking it up to a new high. That's where you trade. That's a really smart entry because it's been tested by sellers, and buyers said, we're gonna keep running this up. You have institutional volume behind it, and boom, that's where you make the money. Those kind of tips are the things that I teach in my live trading room experience. So much to learn. And these are all pretty baller charts, right? That one's not. See, that one sucks. That's the tough chart to trade. One thing you want to do is make life easy on yourself. Trading and life in general is tough enough as it is, so make it easy for yourself by trading charts that are intelligent, consistent, smart, and focused, and they continue on up to new highs. If you buy it at 45 and sell it at 70, great. If you buy it at 70 and sell it at 65, not so great. So what you do is start small. Another quick tip to success, particularly valuable for swing traders, especially valuable, is I start now much smaller and I martingale up. And I don't martingale at 32s. I might do a 1, 1, 2, 2, 2, 2, 4 progression. I might buy 100 shares, and if it goes up 2 points, I buy another 100 shares. If it goes up another 2 points, I buy another 200 shares. And then it might be another 400 shares, 400, 400. So by the end of the day, in 2 weeks, I may be in 1,500, 2,000 shares, but I started off like a snowball, 100 shares at a time, 100, 100, and make sure it's paid for and you tighten your trailing stop to break even or higher as you make that progression. For successful trades, maybe that's 1 out of 3 or something, that'll work. For the other 2/3 or whatever the number is, it won't work. So you take a lot of small stops, but on small size. Your stop losses have to be really, really small if you're going to make it as a trader. Ask any professional trader. That's why institutional traders call me. And I'm the guy who gets the call compared to my competitors. That's why I don't market too much, because I've got a lot of institutional biz. I get the call because I know this stuff and I can teach it in a way that makes sense to people. It's all very common sense. Just ask anyone. Bet small and then scale up once the trade has proven itself correct. That way you're banking you bank profits if there's a pullback and you let it ride if it keeps going up. And it'll pull back and stop you out or chop you out more often than not. That's life as a trader. There is no thing as getting most trades right. That's not true. Ask any Wall Street guy, any baller trader, they'll tell you, it all matters at the end of the day, P&L, right? You do 1,000 losing trades and 200 winning trades and still make a lot of money. That's how you trade. That's really game changing. You really need to internalize it and understand that. You will, for the rest of your life, have more stops than wins. Guaranteed. I'd be willing to bet $1 million that over 1,000 of your trades, you'll have more stop losses than wins. Anybody going to take me up on that $1 million bet? Haven't had anyone yet, because I know my shit, right? I know my stuff. So that's the truth. So what's left is risk management. What's left is teeny tiny stops or break-even stops. That's what I'm an expert at. That's what I do. I trade millions of dollars worth. So that's the guy you want to learn from. The guy actually really trades and knows this stuff, I think. Right? Anyway, I'm 10 minutes into it. I've got another 20 minutes to fill. Let me know if any questions or charts you'd like me to pull up. There's so many patterns to teach. Let's see. One thing is, let's see. Good things come in 3. Okay, so 3 candle patterns are really common. And that's one thing that I like is from a momentum trading standpoint, I like to see 3 candles in a row and then a high above the 3rd candle. This one would have been a false breakout if you had bought the 3rd candle. I get an above the high of the 3rd candle, right? There's a Japanese candle pattern. This is not exactly it. It's actually the top of one and has to be the bottom of the second and so forth. Anyway, like 3 soldiers or something. You can't buy unless it breaks the high of the third candle. So that would have kept us out of trouble. I'm fortunate to have worked with the brilliant master of candles, Steve Nison, for the last 25 years. I've worked with him longer than I've been married to the woman I've been married to. So we know each other a long time, and what he teaches works. Who can, for the fellow Steve Nison enthusiasts and candlestick chart pattern traders, which you should be, what's that pattern? Name that pattern. In 3, 2, 1. Don't everybody post at once. What's the name of this pattern? Nobody? Oh, come on. Well, a lot of you here. This is a bullish engulfing, right? It's a bullish engulfing. It happens at the bottom of a chart, and a small body enclosed or engulfed by a large green body, which means there's a lot more buyers down there than sellers, just like a hammer. But this time it's a bullish engulfing. And so you buy above that high, and boom, you're off to the races. If it starts to go down 3 or 4 candles, or the low of here, take the profit. So in here and out there, that's fine. Let's say you try and buy this breakout and you get stopped out, okay? Welcome to trading. And you wait till this, you don't trade here until it gets to new highs. And over again. You're always looking for patterns that are repetitive and can make you money. Now, pattern recognition skills is one thing that you really need to get really automatic. You have to be on autoplay when it comes to patterns. You can't be looking at, say, trying to figure it out. Oh, is that or this? No. The market's too fast and too smart for that. You have to intelligently know the difference between patterns that work and those that don't, and be able to figure out a progression of trades. Remember, when it comes to trading, every trade should be seen as a sequence of 2 or more trades, 100% of the time. You should never, ever throw a trade out there and hope that it works out all by itself. That's stupid. You're not going to make money. You're going to lose your butt and hide your losses from your family and be all ashamed of it and all kind of, we've all been there, done that, got the t-shirt. Stop the madness. There's got to be a better way. And it's about position sizing and scaling. I learned from my colleague, the late, great Dr. Van Tharp. Van was a really nice guy. I talked to him on the phone a lot. Anyway, really kind man. Anyway, and I miss him. But anyway, you break the trade in half. So if you're going to trade, say, I don't know, 400 shares, instead you do 200 shares for the first pilot trade or test trade, and then you put in another 200 only if it goes up, say, a point or 2 on a swing trade or 3. So that way you trail to stop at break even. So that way you will stop out a lot of times, but you want that to be a free or a cheap experience the vast majority of the time. The ones that do work out and spike, that's where you make money and you start tightening up the trailing stop as it runs and as you're adding shares. And my best winning trades for intraday has been like 5 or 6 trades in a row. My best swing trades have been maybe 2 or 3, spaced out maybe 4 or 5 days apart. That's a big difference from what you may hear out there in the industry from people that don't actually really trade, which unfortunately is most of them. Most of them have read a trading book and all of a sudden they think they're experts. No, sorry. You got to really trade to make it work. Here's another pattern I like, and this is one that somebody copied, but I won't mention their names. But anyway, you see a large green candle at the right side of a bullish cup pattern. That's a good breakout signal to look at. So you got a letter U, kind of thing, a V, a U, and then you have a large candle at the right side, and you go along above the high of that candle, right? And that's a really good, put it in your pipe and smoke it, and remember candle, right? That's a writer down there. Hey, Joe's asking, hey, Joe, how's it going? Which charts do you look at? Monthly, daily, hourly? I look at the minute chart and I look at the daily chart. For swing trades, I look at this is a daily chart, okay? And by the way, TC2000 is brilliant charting software. Many thanks to my colleague, Harry Boxer, the world's best, one of the world's best traders and stock pickers. He's brilliant, and he's highly recommend Harry Boxer at thetechtrader.com. He's the top guy I would learn from if I was learning. The rest of us here are good too. Anyway, TC2000 is good, and that's a pattern to look for. But yeah, I use that's a daily, and here's the minute chart that I use for intraday. And that, I'll pull up, say, RX. And we look for pivots. One thing, too, is to look for, my colleague Steve Nison calls a change in polarity where previous support may become new resistance. And this, although it's not to the penny, it's close enough for government work. Can you believe that? Trump's going to actually maybe fire some federal employees. Oh, what a shame. Anyway, don't get me started. I'm a big fan of the Don. Anyway, so previous support is new resistance. Now, when it breaks above that, that's your buy signal, right? When you're looking for cup patterns are like a DNA strand with a letter S on its side or a Z. Goes down, it comes up, it breaks above high. Okay, you buy there and put a stop right under support or under resistance. Then it takes you range base, use price projection of the depth of that cup to get your exit target for your trade that you're in live, right? That's how we trade. That's how we do it. So this is this length, for example. Sorry if I go a bit fast, but I'm really smart. UCLA graduate, IQ of 167. But you wouldn't know it from some of the mistakes I've made with ladies in the past. Anyway, I digress. Trading is a lot like dating online. It usually ends badly, but occasionally when you hit a home run, it's worth it. So don't get me started about Tinder. Anyway, anyway, so that's price projection, right? The previous depth of the cup becomes your target. That's all you just mentally, you do that as a trader. You don't need to draw it out like pretty chart, but I do for you guys so you can see it. The depth of that cup, that becomes the breakout of the new cup, right? And thankfully I met somebody perfect. So anyway, that's kind of how far does it run before it chops and goes back? The answer's right in front of your face, you know? I used to be a statistician for the Ford Motor Company. I'm a UCLA graduate. I used to be a corporate statistician and consultant to a lot of big companies all over the world. And one of the things we always look at is variability or variance. And so, you know, in manufacturing and production environments, we want the widgets to all come out the same size, right? We don't want variation. We want to get rid of variation and get our control chart numbers up and get our tolerances as precise as possible. As a trader, you want the opposite. You want wide variation. You want things that go from in spec and in control to way out of control, and that's how you make money as a breakout trader. So for those which are the production environment, it's the opposite of a CPK-based range reduction. Anyway, what else do we look for? Patterns that are easy. One thing you want to look at is when's the music over? Okay. When is the breakout going to be done? Well, when it goes sideways. Now, what do you do when something starts to go sideways? Well, I just get out because I'm not patient. I'm notoriously impatient. I'm the most impatient guy in the world. If it starts to go up and it goes sideways, I won't put my money to work on something that's going to go up instead of go sideways. So take the money out and I always put a buy stop order in for a new in case it breaks out later. But I take that capital and go apply it to something that's in the progress of running. So often you'll see what's the logarithmic curve. It'll start to go up and then it starts to go sideways. Take the money or tighten a trail stop to really, really tight and shake it out up there. Book your profit, put the money into another trade, lather, rinse, repeat. Okay, those are the type of things that you want to look for as a trader. Hey, so guys, hit me with some tickers. Let's do swing trades maybe. Let's keep it. Oh, by the way, if you're a trader, you start off with swing trades. You don't start off with day trading. You'll just lose lots of money day trading. It's funny, I started a traders meeting in Honolulu many, many years ago, and a beautiful Korean woman came in and said she'd lost $105,000 day trading, and she was looking at me with the puppy dog eyes, like, "How come I lost so much money trading?" And I was saying to myself, "Well, let's see. Oh yeah, let's see. Can you guys see me? Let's see. Can you guys see my face on video? Just quite. Anyway, post any tickers that you might have, and I can pull those up for you. Let's see. I'm on video. Okay. So anyway, we have that. And so this is the kind of pattern to look for. This is CYBR. This is a good swing trade pattern. It went from 250 to 4. Now, I generally don't trade things this expensive. I like trading things at around 10, 15, 20, $30. Well, usually 20 to $30 a share. That's kind of my sweet spot in terms of price. That's one thing you want to look for too is price action and the breakouts that have the strongest continuous runs in the same direction. We got just about 10 minutes and then we'll have Norm Hallett up. Now, here is our list of traders for today, our presentations. Myself leading off. Then Norm Hallett's coming up to bat in just about 10 minutes. Then Stephen Primo, then Dan Passarelli, followed by Anka Metcalf, then Steve Nison, and Mark Leibovit. So a good roundabout group of traders and smart people. So that's kind of like my quick thumbnail look at some of the things that I find most compelling in my own trades. What's going on here? Trying to. Another question, what's the minimum volume for a stock you trade? 15,000 shares for day trades and 1 million shares a day for swing trades. One thing you do not want to do, and let me ask, can you guys see my face? Is it showing or not on video? Is my face on video? I see Mark's name, but I don't see myself by video.
I see your face. And you hear my voice.
Okay. Anyway, so does that answer the question on volume? Just 1 million shares for swing and 15,000 shares a minute for intraday. It's really important that you use volume minimums, particularly for day trading, because otherwise you could end up in some Yahoo chat room operator who picks thinly traded cheap stocks and he buys 10,000 shares and then he says, "Oh, it might go long," and then all his traders buy it and follow on, and he does, and it's like front running, yeah, front running. So volume is a big hedge against that. So you're trading things that are, and this kind of people are going to hate me for saying it, but it's the truth. Only trade things with a lot of volume, because then some chat room Yahoo operator can't front run his members because they need more volume than the market is trading to move price. But if he picks something that's thinly traded, like under 10,000 shares, it's easy for him to put on 10,000 shares and then have 500 people in a room buy it, and then he sells to them. He bleeds out the trade as they pump it up, and he takes his money and runs. He doesn't tell them about that though. So I tell you guys, anybody that runs a chat room that trades thinly traded cheap stocks and scalps them is a criminal, or should be. Anyway, so be warned. Trade things that have lots of safety in numbers, right? Trade things that are liquid, that have good strength and good relative volume and patterns that tend to work out. All right, well, we've got just about 9 minutes left here. Another quick tip or technique is only focus. Yeah, I can't see my face. You guys can see my upper face.
Yeah, from your
Interesting.
upper lip up is what I see. I see the hairline, the glasses,
I'm sorry, what?
and now I see the hairline, the glasses, and now I see your headphones. Now I see your mouth, your full mouth without the chin.
Okay.
Okay.
Oh, thanks. Okay, so thanks. Okay, everyone can hear you, so thanks. Okay. Okay, well, okay, traders, well, we're back. So here is Robinhood. One thing I want you to look for in trades is when you look for swing trading charts or intraday, the thinner the compressed the line, the better. Charts that are wide and fuzzy all over the place, very tough because you get stopped and shaken out. Trades that are like this, that are nice, like a tight channel, that's what you want to trade. And also, when charts are uncertain, leave them alone, like a lot of these. I won't trade in these. The hood look good. That one looks great, right? CYBR, that's when I called long for my traders at 330. Went all up to 420, right? So that's another thing. 45, you want to look at the standard. It's like, when Michelangelo was going to carve the statue of David, he imagined what the finished product would look like and chipped away everything else, right? As a trader, you want to do that with your charts. Look at the perfect type of chart and ignore all the other charts. Only trade the ones with the best relative strength and good volatility. I'm looking forward to seeing what Norm has to say. He's great. Anyway, so good charts. Let me show you my pitch of the year, and where is that? Over here somewhere. It's the best deal I've ever offered traders, and just something to give some thought to. A stock trading success system. It's a classic that Steve Nison and I put together from a seminar we did in Denver, and it was great. We had a lot of people, well, about 30 people show up at the seminar, and so we've got videos of the seminar. Anyway, I'm not going to go through all this, the ton of stuff. Kind of cool. I did this. Ooh, cool. Anyway, if you like traders, it's like we're like bright shiny things, right? So anyway, it's we had a reality cam. We had charts of people's choice. We had people traders hot seats where they. I got this from internet marketers, and it's a really good idea. Hot seats. What ails you as a trader? And then we'd have all the traders in the room. We'd try and help that person out. So anyway, it's 12 DVDs and all kinds of stuff. The bottom line is, I'm going to turn this over to Norm. But anyway, the bottom line, this is called a bonus stack. Anyway, you got a total value of 9,000 for just $9.97. So you get a year in the chat room, you get a year of swing trading alerts, you get Steve Nissen in my course, and much more. So that's the best value I've ever offered traders. It kind of hurts to give that much away, but I want to reach a lot of people. So that's it. And if for any reason you're not satisfied after a few weeks, just let me know and money back. So I'm good for it. So this is very, very worthwhile. And there's no catches. And none of these turn into subscriptions. Like some people try and sneak in subscriptions at the end of things. No, these are all, it's a one-time purchase, one-time offer. So, and I've never offered this much before for this low price, but I've got an expensive girlfriend. So truth be told, so it's donate the player at the game. So anyway, you guys have been great. And that's at daytradinguniversity.com/success. And I will put that on the, in the chat for you guys to follow up with. So Norman, where are you, my friend? Let's see. How do I? Norm Hallett, are you here?
Yeah, I'm here. Won't let me do the video though, but that's okay.
Okay.
They don't need to see me unless there's a release. But I do want to, while you're looking at that, you know, I'm sitting here writing down stuff that you said. I don't know if people realize quite what all the stuff that you've just given, but I wrote down 2 pearls here. Let's see.
They all actually work too. That's a good thing. They're not, it's not,
Yeah,
not
well,
pulling this out of left field. They work. They're testing real trades. So yeah.
that's it. I'm looking at, see, cannot start the video because the host has stopped it. Okay.
Well,
Now,
let me take care of you. Let's hear.
here's the two, while you're doing that, here's the 2 things I picked up. I just looked at the last 10 minutes. You said that new traders should start with swing trading, and that is an excellent suggestion. And I have a kind of a different reason why it is, and it's because that any trading plan that you have is most accurate in its longest measure. In other words, a
Right.
daily chart is a little bit more accurate than a 270, and the 270 is a little bit more accurate than a 60, and so on. So when
Wait, I'm sorry. Let me.
the area,
There you go.
there
Yeah.
you go. When you, I'm back. Yeah, when you swing
Yeah,
trading,
no, Norm, I made you a co-host, so you should be able to video yourself, or can you
yeah, there we
undo
go.
the?
Yeah, there I am.
There you
Yeah,
are. Okay, hey, there you go.
so when you swing trading, you're actually dealing with the longer time periods. Therefore, you're just going to have better results. And the second thing that you said, which I don't, you go so fast that I couldn't write as fast. I missed a
Yeah,
couple, but you said when you catch a run and it starts to go sideways, you get out, and that's a smart thing to do. You take your profit, but I think it's a smart thing to do from even another area, and that's when you have a good trigger. And I know you're all about, you know, getting in at the right time. When you have a good trigger, why waste your time with accumulations when you can be looking for the next great trigger that you know is going to get
right,
you off to a
right.
good start? So those 2 things are things that I wrote down. And you know, my wife keeps
Thanks, man.
asking me, why do you listen to other people? What, you know, you're a profitable trader. Why do you listen to other people? The reason is because it reminds me and reinforces the stuff that I know to be true. And so
Yeah, yeah.
and that was just the last 10 minutes. I don't know what you said the first 20, but that was
No,
pretty good.
it was good stuff. It'll be on video, but yeah, it's all honest and all, most of the time works. It's all about, the main thing is y'all are going to lose more trades than you win forever. So just get over the fact that you're not going to ever be 51% right in the number of trades. All that matters is size of stops versus size of profits. And that's one big aha. Another is scaling and position sizing with small entries. I think you call them feeler trades, right, Norm, or something like that. Is like your initial
Mhm.
trades are, see, I remember from all these years ago. So I'm a good student of Norm's. He's a brilliant guy. He's glad to have you here, man. That's anyway, you put on these small trades, and if they don't work out, so say la vie. But you don't bet hard, you don't bet heavy, because that's how you lose. You bet small and incrementally, and then build the position. So good stuff.
Beautiful.
All right, well, hey, well, let's turn over to you, Norm Hallett from Disciplined Trader, brilliant, best trading coach out there in the industry, and a brilliant guy. And Norm Hallett, take it away. Good to see you, my friend, and thanks for being here. Appreciate it.
Thanks for the opportunity to share some of the things that I'm going a little bit in a different direction. I'll share my screen when you're done. I'm going in a little bit different. Well, you're going to hear some really good traders. I mean, you've got Steve on here. You've got a number of people that are highly qualified, and they're going to show you some pretty good trading techniques, some excellent ones, some of the best in the business. But none of it is any good unless you have the mental and emotional strength and capacity to do this. That's really where a lot of people fail. And in fact, that's where the 90% are, I believe that 90% of traders fail. We know that 90% do little or nothing about the mental and emotional piece. So I think there is a direct relationship. They won't let me share my screen, but I'll wait till you stop sharing.
Oh, let's see. How do we do this? I'll make you a host, right? I'll elevate you to a host level, and then you can do whatever you want. So just don't stop the event. Okay, let's see.
That's okay. Just go to the stop. Go to the same. Should have an indicator there to stop sharing. Usually, sometimes it's in the pull down menu, the more area, but sometimes it's right there with the share screen area.
I'll just make you a host, and you can.
I'll wait for you. Oh, there you go. Whatever
There
you
you go.
hit, you hit it.
Now you're a host, so you've got the power. Remember that
There
song?
you
You've
go.
got the power. Done.
You got the power.
Done.
Well, you know, I was in the disco business. I ran some of the highest end discos in the country. It's
I didn't
once.
know that. Wow, I like songs like Disco Inferno and all that. It's a good
That's
song.
it. Dun, 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 dun. Yeah,
Yeah,
Disco
right.
Inferno. Well, that Park Avenue nightclub, the first one
Wow,
was in Milwaukee on 500 Water Street.
I did
Anyway,
not know that.
let's get into the. I'm going to give you today the 2 steps to eliminate the fear of losing, revenge trading, lack of patience, hesitation to pull the trigger, strength to take your losses. and I'm gonna give you something for $197 if you want it. That will encompass all of these solutions. So again, you know, that's the toughest thing for traders to do. I mean, you can buy trading plan after trading plan, but until you look in the mirror and say to yourself, hey, it's not the trading plan, a lot of it is me. You're just going to keep running around that wheel. So let's get into some of the reasons why you may be that you probably are. If you're listen, if for instance, if you're a client of Ken's or Steve's or some of the people, you really should be winning if you follow there. If you're not, this is the element. And again, if you've been trading for a while, you're a pretty good trader. You think you're a good trader, but it's just not happening. Let's stick with me here, and I'm going to give you the scientific reasons why this is true. I'm going to expand the screen so that you have a full view. I've been around. I've run very large option firms, and which was my love in the first, and now I'm really strictly a futures trader. But I've written several books on constructing trading plans. Books have been written about me. This is a video that's, I think, still online. One of the presentations I gave at one of the expos. I think Ken may have been at one of those. And I think most people know me online the last 15, 20 years from my 4-minute drill for traders, where I give it right between the eyes, like I'm going to do today. I'm going to be a little tough on you today, because there is a solution if you care to, if you care to change, and you know it's you that's your own worst enemy when you trade. There are over 1 million views of my 4-minute drill for traders, so I thank you if you've been part of that number. I did work for Payne Weber as a commodity trading advisor, managing millions for profit, and of which I grabbed 20% of the profit I made. But it wasn't always like that. You have up and down days, up and down months when you're trading big money under certain restrictions. But it was the selling part. You had to go out there and sell. I was with them a couple of years, and then decided I would go out on my own with my capabilities. I started the Hallett Commodities, where I was clearing my own trades and others that were trading with me, some of my older clients and some new ones. And in 2000, I started the Disciplined Trader, where we focused on the mental and emotional capabilities of trader. That was the missing piece. Nobody wanted to hear about it. But the more we exposed ourselves, the more traders decided that, hey, maybe it's not as it's uncomfortable as I think it will be. So let's get into some. My wife here, I should mention her. Not only have I been married 40 plus years, but I am married because because she's one of the world's best and most recognized subconscious trainers. She has helped everyone from Olympic athletes to the traders that we work with on their mental and emotional capabilities. In fact, all of the recorded sessions that we offer to traders, of which I'll be offering to you at the end, are produced and done. Tisha, she's actually known also for her voice, so she still has me under her total control. Now, let's talk about total control. Let's talk about control in general. In specific, there are two parts really to your mind that you need to kind of compartmentalize. One is the conscious mind. That's the voice that you hear. Should I take the trade? Should I not take the trade? Boy, I'm a little bit afraid here. I just lost 2 in a row. Market's a little bit volatile, but I need to have a successful week, and I need to come back. So maybe I won't wait for them. I'll go now. All that little voice, that discussion is going on in your conscious mind. It's the subconscious mind that determines how you will eventually act. Okay, the subconscious mind, you feed your subconscious mind with thoughts and ideas. I'm going to show you the science behind this, and then that subconscious mind, feeding the subconscious mind. If you feed it the same thoughts repetitively, you'll form what they call a neural net. I'm going to show you one of those in a second. But if a trader comes to me and says, I don't know what's going on, I really don't. I ask them how. If I observe them in person, as I did when I was running a trading room of 63 traders at one time in one of the larger rooms, I can tell by what they're doing. I can tell exactly what their subconscious mind is demanding of them, or is literally forcing them to do, based on how they're acting. So if you're doing the wrong things as a trader, it means that you have developed the wrong neural nets in your subconscious mind. And let me show you what I mean by that. This is a picture. This is an actual photograph of what the subconscious mind really looks like. These tendrils right here are what they call neural pathways. This is actually thought energy. This could be, boy, I just lost on that last trade. I'm really not sure. The markets have been real volatile. February has always been a lousy month for me. If you are giving yourself those kinds of inputs in thought energy, and they are the same likeness, it will form a fear of failure node. This is called a neural net. So these neural pathways with enough of the same input, with enough of the same thought energy. I'm not out there, talking about aliens. I'm talking about your mind. This is how it works. This is a photograph of how it works. And this is your neural net. This is what controls your actions. So when your conscious mind starts to discuss with you, the final decision will be based on what you have contributed to yourself as truth for you. So the subconscious mind, it will guide you in what it believes is true for you based on how you have given it input. So how do you reverse that? How do you do the right thing instead of the wrong thing? How do you be patient instead of impatient? How do you get over losses instead of lamenting? How do you take your loss instead of moving your stop around? Here's how you do it. You take a few deep breaths and calm yourself. And I ask traders, and we instruct traders to do our 7 to 10 minute meditations before they start. Just one time, once a day, a 10-minute meditation. And in that meditation, you'll hear a voice, my wife's voice, that will say, I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. I understand that being patient and waiting for the perfect setup will benefit me and make me profitable. I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. I'm patient, and I understand that works for me as a trader. Professional traders who are successful are patient traders. I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. You listen to that. You don't have to repeat it. You can just listen to it. It's going into your mind, okay? And it's going into your mind in the form of these neural pathways. And all you have to listen, 10 minutes, 8 minutes, 5 minutes, however long a particular meditation is, overcoming fear of failure, overcoming fear of losing, improving patience, stopping hesitation to pull the trigger. They all have their own meditation. So whatever it is, you can go right directly to it and build. All it takes is about a week. In other words, 5, 6, 7 listenings, when you just take a few deep breaths and listen to build a neural net that will work for you. So now, having done the meditation for 5 or 7, or if you have a hard head, okay, maybe it'll take 10 days or 2 trading weeks in a row. You have built enough neural pathways to form a neural net that will supplant the former one that was guiding you, which will start to atrophy because you'll be smart enough not to input into your mind the negative thoughts that lead you in the wrong direction. This is science, okay? There's another piece of science I want to show you. It's called EFT. It's called the Emotional Freedom Technique. And the Emotional Freedom Technique is the go-to therapy for post-traumatic stress disorder individuals, okay? And I'm not comparing the trauma of post-traumatic stress disorder, which is probably one of the which is the toughest situation that you can get in from a mental standpoint. I'm not comparing that stress with our stress, but we have stress nonetheless. And if it can work for post-traumatic stress disorder, the trauma that we have as traders certainly work for, and it can. And I'm not going to go into it. We have it in our course that you can take a look at, the explanation. But quickly, it really, if you've ever gone to acupressure or acupuncture, it's an Eastern philosophy type of approach. And so I just showed you before with the neural pathways and neuronescence, kind of a Western view of things. This is the Eastern view of things, more of a preventative kind of thing. Actually, in this sense, where we use it as an emotional freedom technique, if you let those thoughts come to the surface, and what happens is that tissue will guide you in a video, and you will repeat after her the issues that are happening, whether it's lack of patience, whether it's hesitation to pull a trigger. And as she is asking you to repeat certain statements, she is going to ask you to tap in these areas at the same time. She'll say something, you repeat it. She'll say something, and these open up. These are the same places where they put the pins in when you're at the doctor or the therapist. The same place where they put the press for acupressure, acupressure. If you tap on these same areas, you can release the chi. Now, it may sound crazy to you, but this stuff works. It's working for post-traumatic stress disorder. There are hundreds of studies about how well it does. It is the go-to therapy for post-traumatic stress disorder. It works even better for us as traders. This is what I call the emergency therapy. This, once you have a 5-minute session with this, it literally can eliminate the situation almost immediately. And I've seen that done. Sometimes it takes 2 or 3 sessions. You'll be availed of all of these sessions to take on your own. This is what it looks like in the video. Tisha's now tapping right above the eyebrow, and she's asking you to repeat. Here's some of the sessions that we offer: trading to make money, sustaining discipline, exercising patience, coping with losses. And so you'll sit there, and this is the dot right here. This is probably 6 minutes long, and this is a long one. This process is a release process of energy, because again, we are all energy. Don't want to get into that because I don't want to sound like I'm out there, because I'm a mathematician. And when Tisha brought this to me 30 years ago and said to me, "You got to sit down, Norman, and you got to change the way you think and act," this changed everything for me. So I said, "You got to join me in the business and help me change everything for everybody else." So really, you're going to hear a lot of great advice today. You've already heard some from Ken. You got Steve coming up, who's a good friend. You've got others that listen. There's a lot of this stuff going on with the myriads of all these people talking and offering, but Ken puts together the best people. You're going to hear, and it doesn't really matter who you follow. They're all going to be good. You have to kind of get pulled in by somebody and choose that. You got to let yourself be yourself and choose who's right. But it doesn't matter who you choose. It's going to be a lot tougher to succeed unless you have the mental and emotional control. And the first people to tell you about it are all the people that you'll see. I am the go-to guy for the mental. Everybody in the industry knows me, and I'd like to help you to do it. Boy, I wish I looked like that. I still don't look like that anymore. This is a program called Excel. It's a $997 program that we ran about 5 or 6 times, and it was a 28-day extravaganza. Okay, and it's all recorded. What I am offering you is the recording of this. You can move through it at your own pace, but you have everything that you need, and you can zoom in on exactly what your situation is and get it done, get it resolved very quickly. In this course, of which again, this course you're getting the replay of one of the Excel courses that we did. It's 5 weeks of meeting. You can see the people you'll see in the video that all the people that were in the room. We asked them their situation. Anyway, there are worksheets that help you to expose what's real for you and what isn't. We work with those proven assets. In other words, when we were doing on a Monday, we'd have the next Monday, 5 Mondays in a row. And between those meetings, we asked them to do the subconscious trainings and the EFT sessions that were appropriate for that meeting. You're going to get access to all this stuff. And then there was accountability. This you will not get. And this is, you're going to have to be strong enough to follow the simple directions on your own. There's always a resistance to change. People like to stay the way they are. The accountability piece, you're going to have to supply yourself. Just look in a mirror. Just ask yourself at the end of every day of trading, did I do the right thing when it came to making the right moves? Am I being accountable to myself from a mental and emotional standpoint. Here's what it looks like when you look at the recordings. Each week there's a recording of the session that we took. This particular week 1, we worked on pulling the trigger without hesitation. You'll get your subconscious training, the tapping sessions for that. The next week we worked on overcoming thoughts of fear and greed. Another one for revenge trading. Another one for lack of patience, and so on. So you're going to get everything that you need. Norman and Tisha, I'm very grateful for the evolutionary development that I've experienced through your mentorship. Through the Excel workshop, Norman and Tisha provided me with cutting edge advantage. I needed to turn the frustration, the years, and et cetera, et cetera. This is, and you can see that these are the actual, I blew it up so that you couldn't see the names, even though, I don't know if you can read this. Can I quote you? I always ask when they send me these kinds of testimonials, can I quote you? And Tom was nice enough to allow me. Here's another one. Often traders get wrapped up in indicators, patterns, moving averages, time frames, and the like. Try to tweak their process. The true holy grail of trading is the mental component. This 5-week Excel course has helped me develop a daily routine designed to improve my confidence. Take this course as slowly or as quickly as you can. You can actually probably do it literally in a couple of weeks, but take your time with it. You've taken this much time not doing anything, probably, or very little, just talking with your own conscious mind. But let's work on the subconscious. Okay, the subconscious trainings, the emotional freedom technique exercises have been, that's the tapping, immensely helpful. Any trader who does not work hard on the mental approach is doomed to failure. Norman and Tisha have the exact program you need. That's for Lee, is a great trader. And finally, I believe that developing the mindset of a professional trader is the holy grail of trading. So when they announced the Excel program, these people paid $997 and they are thrilled. I want you to have it for $197. Okay, and this is an America Top, and you'll see it on the page. I'll show it to you real quickly. America's Top Traders. This event here, it's special replay for you people. Ken and I have been together for a long time. We, if you ever listen to our conversations, we laugh a lot and we've even cried a lot. But I'm telling you that we both have the same purpose, and we got enough for ourselves. We want it for you. This replay of Excel, I'm going to get 80% off. It's just $197. All you have to do is go to thedisciplinedtrader.com/Excel and use the coupon code SOLUTION. Okay, this is going to be good for at least today. I think it's actually set up to be good just for today. I don't want to be giving away things from the standpoint of devaluing them. This is a $1,000 program that I'd like you to have for $197. I don't want to do it long because I don't want this video out there and people think they're overpaying at $997. It was originally $1997, and we felt so good about getting more people. We reduced it to $997. I'm just saying to you right now, this could be your key. I believe it can be, especially if you're getting in your own way when you trade. So that's my presentation, and let me do one more thing. If you would put that, I'll put it in the chat if you haven't already. I'm gonna shut this down and just show you one thing. This is what the page looks like when you get there. And you'll see that I've explained it all right here. You can see that this is for the American's Top Trader. You can see why I'm doing this and what we're doing here. But here's the actual sales page that we used for the $1,000 program. And all you have to do is scroll to the bottom and use that solution coupon code. And it's going to result in literally $800 off $197. I want you to be a better trader. You're here. You're smart enough to be here with a group of people that you won't really see anywhere else in this quality, and therefore learn to follow what they're asking you to do. Do it with ease instead of resistance. I'm getting pumped up about this because I have seen the change that a strong mental game has. Any of these speakers will tell you that. All right. Well, that's it. That's it, Ken. That's what I got for you. You asked me to do something.
Well, thanks. Hey, thanks so much. A great job from Norman. I highly recommend him because, here's something you can use this, Norman. It's good. When I think of, resources for traders, I look at it in terms of a tripod or, a tripod, 3 legs. One is technical, one is financial, and one is mental. And that's brilliant. So you should use that. That's a good graphic. Traders get sold much on the technical, not nearly enough on the financial and the mental. And they lose their butts because they think technical trading is it. If I learn this chart pattern, I'll make a fortune. No, trade management is the most important thing, and mental is a core part of that. So people have the right expectations, the right mindset of a successful trader. So going into it, you know, the worst that's going to bite you in the butt is this, and the upside is this, how to manage the difference. And your training helps them achieve that. So it's really good stuff.
I appreciate that. I see Steve. I'm gonna ask Alexa something. Alexa, what is the meaning of primo?
Primo is a noun meaning the upper part of a piano duet and can also
Upper-
be an adjective meaning first class.
First class.
First
That's
class.
it.
I like that. That's
Primo
good.
means first class, Stephen, and he couldn't have a better name. So don't go away.
Yeah, Steven's coming right up. And yeah, Norm, well, hey, let's chew the fat here for a bit. One of the things I wanted to ask you is because you did a brilliant presentation last time too. I learned a lot from Norm too. He's the number one. He is the number one guy for mental. He really knows his stuff. He's been around the block and a few thousand times, like we all have. Do we get older? We just get older. We get better too. I hope it's
Better look at we get. That's it. You got it right.
Yeah, I hope so. What's like the number one shift that you've seen in traders the before and after? You know, because I know for myself, what I learned from you really helps me kind of back up what I'm doing and make sure that am I right? How to say, before I
Yeah,
pull the trigger, I'm asking myself, am I in the right mindset? Are the patterns there? Or am I just gambling? And what I learned from you is really to focus on, you know, the choice setups and make sure you're trading like a professional trader and ignoring everything else. And that really helps me focus. So yeah, you help me focus. Yeah.
Well, you know, again, I'm going back to your presentation. There's two ways of you can adjust your trading plan to recognize where your weaknesses are. You've admitted that your weakness is that you lack patience. Well, there's two ways to do it. You can help yourself, but you really should be doing both. And I know you do both. You train your mind and you adjust your trading plan so that you know that when the sideways movements come, you get out because you just don't have the patience to sit there and wait for the sideways movement. You put your order in to break out or break down, and you leave it alone. Let the market get you in. But the idea is that if you ask what the I would say the number one issue is, I can only judge by the testimonials over the years, and I would say that the greatest number of testimonials comes with the area of patience. Where traders, they want the action, they want to be in it, they can't wait for the setup to complete, they get in early, or they wait and they're looking for another hurdle, they get in late, and so they decrease their profit potential and increase their risk. They do the wrong things on both ends of it because they lack patience. And when you're a patient trader and you understand the trading plan, that's a highway to success. So the answer to the question is patience.
Yeah, that makes a lot of sense. Another thing, my favorite P word is that I can talk about is a process, step by step. Like back when I was a consultant, I'd use flow charts to help businesses understand core business processes and choke points and how to improve. In trading, I think the mental side too, there's like a process that they go through. I mean, can you walk me through maybe a process that, you know, the first thing when they learn from you in the mental side of it, what's like the first, second thing? Is there like baby steps they start with and then they go, or what's the
Well,
process?
I think that we've really fast tracked all of that. I think we just ask somebody to ask themselves. In fact, we use when we do one-on-one, we use a particular technique called reversing. If somebody says to me, well, I just keep missing trades, I say, well, when you say missing trades, what do you mean? And they say, well, you know, I'm missing trades, but you know, I see a trade and I don't take it. And then I say, don't take it. And then I'm digging deep, I'm just questioning deeper. They come out with, and it's so obvious when the truth is, you know, I'm just tired of losing, you know, it's just, the voice drops and they throw it out there. And once we know, then we direct them to one of our subconscious trainings, which you'll have availability to in this offering. And just say, hey, 7 minutes a day, take it before you start trading. And build those neural pathways, and it doesn't take long to build a neural net. And then then you'll be doing it naturally. You'll be doing it on your own. And if there's an emergency, something that's really hurting you, go to the EFT. The same thing that the post-traumatic stress disorder cures. Go ahead and do that first, and then back it up with the neural pathways. You know, so we'll get those processes, and they get it all here.
Yeah, and you're really good training too, because I agree. You want to be on autopilot. Like for me, I do so many thousands of trades. I'm on autopilot. I know exactly what I'm going to do, and I don't second guess myself. I know, you know, a dozen other trades, and so I diversify and balance my risk, and so it's all on autopilot. But when I first started trading, I was always uncertain, not sure what I should do, and didn't do enough trading, so I made big mistakes and blew up accounts. And in time, you learn that blowing up accounts is hard to explain to whatever woman's in your life. So
there's no time to think. There's no
Yeah.
time to think. So it's got to come. And when people trade 1 minute, I can't do the 1 minute candles, but a lot of the people that have my trading courses, they trade the 1 minute candles. I can't, not enough, I'm fast, but not that fast. So, measure yourself, know yourself from the inside, and then respond with the right kinds of training. So thanks again,
Right.
Ken.
Yeah, thanks a lot. I appreciate it. And yeah, for all you listening, he's one of the best guys out there. So be sure you learn from him. All the people here are great. So good to learn with you. And thanks, Norm, appreciate you being here, man.
Okay, and here comes the guy with class, Primo.
All right. Hey, Steven, are you here?
Hello, yes, I am. Thank you, Ken, and thank you, Norm, for that nice introduction. Can you hear and see me okay?
Well, let's see. I can hear you. Let's see. Can you click your video and see if it'll let you video?
Okay, I don't have a camera, actually. I just have a PowerPoint presentation.
Okay, well then, let's see.
Just
Can you
use the
share
share.
can you click the where it says screen share, the tab at the bottom?
Okay, hold on a second. Yeah. It says host disabled participant screen sharing.
Okay. How do I fix that? Okay. I will make you a co-host. Let's see if that lets you do it.
Okay.
Can you try it now? Try it again. Yeah.
Okay, there we go. Okay. How's that? You can see that okay?
Yeah, we can see that. Okay, great. You're in good shape. Well, thanks so much for being here, too, Stephen. It's I think it's your first time here, right?
It sure is. Yeah, thank you, Ken, for inviting me.
Well, sure thing. Yeah, I remember meeting you in person. It was either in Vegas or New York, but yeah, you're one of the good guys out there. So, well, let me go ahead and give the floor to you. And this is Stephen Primo. And thanks for being here, Stephen. Let's listen. Thanks everybody, and let's go ahead.
Okay, thank you, Ken, and thanks to everybody for being here today. Today, I want to talk to you about the very first strategy I ever learned. I learned this nearly 5 decades ago on the floor of the Pacific Stock Exchange. And guess what? I continue to use this strategy each and every day when I trade. I use it today. And so I'm going to actually give you the first 2 rules of this method. So you can actually apply this for entering using this method. I'm going to show you a bunch of examples today where you'll see just how powerful this actual method is. For example, well, let's just start off once again by just giving you a little bit of information about myself. I've been trading now, as I said, for 48 years. This month, actually, I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. A specialist is someone who made markets in roughly about 50 or 60 stocks. So I made markets during the crash of 1987 and the bull market that followed. I left the floor in the mid-90s to manage money and to manage my own account as well. And about 15 years ago, I teamed up with Pro Trader Strategies, and we formulated Specialist Trading, as you see right here, where it's a website just devoted to educating traders so that we can put the power back in your hands so that you can make your own quantified trading decisions. See, in my 48 years of trading, the only traders I know who are still around, who are still consistently doing well, are the ones that make their own trading decisions. They don't rely on an outside source to tell them what or how to do it. They've gone to educators and mentors, but then they've taken that information and then they've made their own decisions. So this is our goal. We're an educational company, and we strictly want to educate you so that you can put the power back in your hands. And you'll see that attention to detail in today's educational class. Now, before I begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company only, all examples are strictly for educational purposes only. Now, if you'd like to get some more education on a daily basis, please feel free to follow us on X, formerly known as Twitter. You can actually copy down our handle right there, abbreviation for Specialist Trading, at SPCLSTTRADG. We also, we also do our own YouTube presentations as well. So lots of ways to get free education on a daily basis. Feel free to follow us on Twitter. Okay, so we're going to begin right now. We're going to jump right into it. I want to share with you what this strategy is. And this is strategy number 4. It's actually the first one I ever learned, but it is an amazing method. And the reason why we call it strategy 4 is it only has 4 rules. There's only 4 rules to this. It's an extremely simple but powerful method. So I'm going to walk you through some examples. I'll share with you the first 2 entry rules so you can know exactly what it takes for this entry. And then you can see how powerful it is with a number of examples in different markets and in different time frames. So let's look at some recent strategy number 4 examples. And we're going to start off with Amazon, okay? This was just about a month ago. Now, someone looking at this that isn't familiar with strategy 4 would say, well, Steve, I see this chart and it looks like we're in a downtrend, right? We're making lower highs, lower lows. So I guess I should look to short this. But here's the first rule of this strategy. And the first rule we teach all of our students around the world is you have to be in sync with what the market wants to do. Most traders fail because you're out of sync. Think of it. When the market wants to go up and you sell, you're out of sync and therefore you have a loss. Or when you're buying and the market wants to go lower, well, you're out of sync. That's why you lose. It really isn't any more complicated than that. So the first rule is you want to be in sync with the overall trend. And here's how we do it. Regardless of what time frame, what market, in this case, we're looking at Amazon, you want to apply the 50-period moving average. That's it. It makes no difference, but it should always be on your chart. And then you have to ask yourself a question. Where is price in relation to the 50-period simple moving average? Because if price is above the way it is right now, well, that is simply telling you that the market wants to go higher because the overall trend is up. You see, it's that simple. So the market wants to go higher on the overall trend, on the longer term trend. Okay, so we never want to be out of sync with the overall trend. We never want to buck the trend. We never want to initiate a sell signal when price is above the 50. We'll only, by sell, I mean going short. I don't mean exiting a trade with a profit. I mean by selling, going short. And vice versa. If price is below the 50, we never want to initiate a buy signal. Now, obviously, you will have some amazing buy signals below the 50 and amazing sell short signals above. But over time, you will see that there's really not a lot of consistency in trading that way. Take it from someone who used to trade that way some 48 years ago and couldn't make a dime my first couple of years of trading. It wasn't until my mentors, who were specialists themselves on the floor, introduced me to this simple rule that my trading started to turn around. Think of it like the slot machines in Vegas, okay? You always see people at the slot machines and you hear the bells and whistles going off, and every once in a while you'll hear someone get a jackpot and make some nice money. But those are designed to keep you there because, you know, if you keep trading, or I should say keep betting and keep using the slot machines, over time, you're going to give all that money back. It's no difference when you are going short above the 50 and going long below, okay? If you don't believe me, go back and look at your last 10 or 20 trades. I can almost guarantee you why you had losses were because you were out of sync with this simple but powerful rule. Okay, that's rule number 1. Now, rule number 2 is, now that we know we're above the 50, we want to look for bars that close in the top 25% of their range. That means the top of their range, or the top quarter. So we see this bar closed right around the middle. This one closed at the lower level. This one closed close to the top, and not really, but the only one that really closed toward the top 25% was this one. All right, so that's rule number 2. Why are we looking for that? Well, it's because that is telling you now that the short-term trend tells you it wants to go higher. So now you have the short term in sync with the overall trend. You see, there's no reason to look at 2 different time frames. There's no reason for all these convoluted indicators to tell you what the trend is. All you need to see are these 2 things. And these are the first 2 rules of strategy number 4. Now, I can't give you the remaining 2 rules. It wouldn't be fair to our students around the world who have purchased strategy number 4. But these are the first 2 components and requirements that need to be met. Now, in the course, we teach you all of the requirements. It's not a black box. We teach you exactly what to look for. And so we want you to get to the point where you can look at any chart on any platform and say, oh, there's a strategy for buy signal, or there's a strategy for sell signal. But while you're learning how to do that, we developed our platform, the PTS Primo charting platform, that makes it simple. Once you think you've seen a strategy number 4 buy signal, simply on our platform, click on the strategy number 4 icon right up here in the green strategy tab list. And in the drop-down menu, click on signal arrow. And it will share with you if there's an actual signal there or not. And as you can see, yes, there is. Okay, we closed in the top 25%. We are above the 50-period moving average. And look what happened in the following days. It went up 20 points. You see, this is how simple trading can be when you get out of your own way. And what my mentors taught me when they first saw me trading, they saw I had tons of indicators on my screen. I was following so many news events, earnings, all these different indicators, listening to all these trading gurus. And for the first year or so, I couldn't make a dime. And they said, Steve, your trading is too overcomplicated. It's the easiest thing in the world to overcomplicate your trading, but it's the most difficult thing in the world and challenging thing in the world to simplify your trading. But once you simplify it, then you'll see you're on to that road to consistency. All right, let's look at this example now in EA. Most traders looking at this chart would say, wow, Steve, this is a directionless market, right? There's absolutely no direction. I don't want to touch this. I'm going to lose money. It's just going sideways. Well, it may be going sideways, but if we apply the 50-period moving average, where is price? Remember, you always want to apply the 50 moving average and ask yourself, where is price in relation to that? Well, obviously, price is below. So even though price may be going sideways for a while, the overall trend is still down. In other words, the market, not me, not some guy on TV, not some convoluted indicator, the market is telling you, I want to go lower on the overall term. So obviously, we don't want to be a buyer. So now we look for a bar that closed in the bottom portion of its range here. Well, we have one right here, we have another one right here, and another one right here. But the only one that has met all four of the requirements is this one. So let's check our work. Click on strategy 4, click on signal arrow, and yes, you're learning how to properly identify a strategy number 4 sell signal. So you could have sold on the close of this or 5 minutes right before the close if you were an aggressive trader. Guess what? The market fell out of bed 28 points in the next day. Okay. Now, obviously, it dropped down based on some news event or some announcement, maybe some earnings report. I don't know, because I stopped following the news 48 years ago. And I'm not saying that you don't have to follow it. If you want to, you can, but there's no requirement in anything that we teach, because everything we teach is based off market behavior. In other words, if the market, the chart or stock, future, currency pair is the source of what you're trading, then doesn't it make sense that that's where you should be getting all your information from? Only trouble is that we're taught the opposite. We're always taught to look for the answer in an outside source, something outside of us. But it's right there in front of us on the screen. Here's another example in Costco, okay? Someone said, well, Steve, this is going higher. You always say to be in sync with the trend, and we're making higher highs, higher lows. It's true, it is going higher, but if we apply the 50-period moving average, we see here that we are still below. We don't have even one close above. So we're not ready to buy this yet. But let's see what happened on the next bar. Well, the next bar closed above. So now we have one bar closing above. We'd rather have more bars. The more bars you have closing above, the more valid it will be. But even one bar is okay. It's a little bit more aggressive, but it's okay. And on top of that, it closed in the top 25% of its range. So we have the two rules met, as you can see, and it's a valid buy signal. So had you taken advantage of this, which was just a couple of weeks ago, 78 points to the upside in Costco, okay? Here's an example in CTAS, Cintas. All right, this stock was going sideways, but all of a sudden it fell out of bed, all right? So obviously it looks like something happened. It's negative right now, but what happened the days to follow? It started to go up. Maybe you joined that chat room where the guy says, hey, Steve, this is bottomed out. It's time to go long because look at it, it's hit some type of support. So you want to get in, it's probably going to go back up and make new highs. This is why most traders fail, because you're taking your power away and giving it to someone else. You have to be able to make your own trading decisions. The easiest way is to be in sync with the overall trend. We apply the 50-period moving average, even though we may think it's a bottom. The last 1, 2, 3, 4, 5, 6 bars have all closed below. So not me. The market is telling you, I want to go lower. Now let's look for a bar that closed in the bottom 25% of its range. Well, we have this one right here, and we also have this one. And this is the only one you think that has met all the requirements. And so if you simply click it on our platform, you see that, yeah, that's a valid sell signal. You could have sold them. This was just about a month or two ago, and 30 points to the downside in 3 days. Okay, so what happened to the support? What happened to that bottom that was forming? Remember, the market tells you everything you need to know. It's just that we've been trained never to listen to the market. It's right here in front of our eyes. It's what we're looking at almost 24/7 as traders. You should be able to get the answers from it. All right, let's look at a chart of KLAC. Traders always love to play the blame game, like, oh gosh, this took off. How did I miss it? I wish I would have known, but gosh, I just didn't see this coming. Well, if you would have followed these simple rules, you could have at least been privy to a strategy 4 buy signal, because the first thing is you apply the 50, and you would have known that at least at this point right here, when we had a couple of closes above, that the market wanted to go higher, even though it was a good 100 points lower. Now, at this point, we start looking for bars that close in the top 25%, and we have a couple right here. So if you checked your work and adequately learned how to identify strategy 4 buy signals, you would have seen that you had actually 2 in a row, and you could have potentially captured 95 points in 1 week, all because you did it yourself. Remember, our job as a mentor is not to trade for you, not to furnish you signals and tell you what to buy or sell on a nightly basis. That's actually doing you a disservice. We're taking you out of the game. Our job as a mentor is to teach you what to look for, teach you the different ways to buy and sell, and then let you run with it. Okay, here's a classic range market, right? Traders are always taught to stay away from this because every time you buy, it goes down, you sell, it goes back up. So you buy again, it goes back down. So this is called whipsaw territory. You don't want to do anything during a range market, right? Well, is it really a range market? Because once we apply the first rule, the 50-period moving average, we see that the majority of the bars have closed below. Now, obviously, we have one that closed right here above, but it didn't meet all the requirements of the strategy number 4 signal, so it wasn't valid. But since we closed below, the majority closed below, guess what? We have a bar closing in the bottom 25%, and the remaining 2 rules of the strategy have been met. So this was a valid sell signal just about a month ago, and it dropped 70 points in the following day. Now, how did we know that? Did the CEO of VRTX call me up and say, hey, Steve, why don't you go into a chat room and tell all your students to go short because we're going to make an announcement tomorrow where the stock's going to drop about 70 points? No. We don't follow anything fundamental or any economic news or anything of that nature. Once again, if you want to, you can, but it's not required. We only follow what market behavior is telling us. And it's a lot easier, trust me, than trying to figure out some economic report. All right, let's look at an entirely different market. Here's a 4-hour chart of the euro yen for all you currency pair traders, okay? Looks like we're in an uptrend, right? This is where traders often fail because they say, well, Steve, we're going up, so I should be a buyer, right? That guy on TV said you've got to buy the euro yen. But are we really in an uptrend? If we apply rule number 1, well, we're below the 50-period moving average. Remember, we always want to ask ourselves, where is price in relation to that 50-period moving average? And price is below. So even though, yes, we have been bouncing, this is not a buying opportunity. This is a selling opportunity. You should not be looking at this as something to buy. You should be looking at this as something to sell because the odds are in your favor. Since we are below the 50-period moving average, since the overall trend is down, the market is telling you it wants to go lower. So we want to find a bar now that closes in the bottom 25% of its range. Well, these are closing in the top to the middle, but here we have one that closed right close to its lower portion of its range. All right. So this is telling us that the short-term trend as well as the overall trend are in sync. So those are the first 2 rules of strategy number 4. Now we have 2 more rules that need to be met. Once again, sorry, I can't divulge them right now, but let's check. Let's say we think that they have been met. Let's check our work. Click on our platform, strategy 4. Click on signal arrow, and you're right. You're learning how to properly identify a strategy number 4 sell signal, this time in the 4-hour chart of the euro yen. And look what happened. In the next 2 days, it fell 170 pips. Now, this is why most traders fail, because you thought that the trend was initially up, so you must have bought somewhere around here, and now you're left holding this as it's 170 pips lower. Use this simple couple of rules, and you'll be on that road to consistency much quicker. How about day traders? Okay, here's a 15-minute chart of Microsoft. Now, this was just about a week ago. Someone once again would say, well, Steve, it's not doing anything on a 15-minute time frame, but sure, it's not doing anything yet, but we are above the 50. So it's telling us that it wants to go higher, even though it's not doing anything right now. So we need to find a bar that closes in the top 25%, and this one did, and the remaining rules were met. So it's a valid buy signal. And in the next 30 minutes, a 5-point gain. Not a bad gain for a 15-minute chart of Microsoft. Going back to currency pairs again, here's a 4-hour chart of the Canadian dollar. Okay, once again, kind of just going sideways on a 4-hour time frame, but all the bars are closing above the 50-period moving average. So even though it appears that nothing is happening, the market is telling you, I want to go higher in the overall trend. And now that it's closed in the top 25 percentile of this bar, it's telling you, I want to go higher on the short-term trend. Remember, there's no need to look at two different time frames. You can if you want to, but I personally have found no consistency in using that. It's only made me keep out of a lot of winning trades by waiting for the two time frames to line up together. I just look at one chart at a time, one time frame, and use these simple two rules along with the remaining in strategy number 4. And once you generate a buy signal, look what happened. 225 pips in just 4 hours. That's over $2,200 potentially you could have captured in using one unit. Okay, so let's talk about some of the highlights of this particular method that I still use today. In fact, I had 2 or 3 trades this morning before I had another webinar, and one was a loss because every once in a while you will get losses, but the remaining 2 were winners. So I made back what I lost and then some. That's what a consistent method does. Now, strategy number 4, as you've seen, is a pattern recognition strategy. We're looking for a pattern that repeats itself over and over and over again in all markets and in all time frames. You've seen the first 2 rules of that pattern. There are 2 more rules remaining that the students know about, that they want to identify. Now, it's designed for traders looking to catch this quick momentum. Now, when I first used it on the trading floor, when my mentors taught me this, we were trading it with 1 and 2 minute bars because on the floor, we were getting in and out of trades in 1 or 2 minutes. But we've developed ways to stay in the trade days, weeks, or even months if you'd like. And remember, you can apply it to any market and any time frame. And lastly, it only uses one indicator. And you already know what that is. It's the 50-period simple moving average. Once again, if you don't believe me how powerful this indicator is, go back and look at your last 10 or 20 trades. And I can almost guarantee you, you had losing trades. You were losing because you were buying below the 50-period moving average and selling above. Remember, sure, every once in a while, you will get a fantastic buy signal below the 50 and a fantastic sell signal above, okay? But remember, it's just like the slot machines in Vegas. You'll get a big winner every once in a while, but if you do that long enough, you'll eventually give all your money back. I'm not saying this to be arrogant or condescending. I'm saying this from firsthand experience. My first year as a trader on the floor, as a specialist on the floor of the exchange, I couldn't make a dime because I traded that way. It wasn't until my mentor saw how frustrated and despondent I was, how nothing was working. I was doing all the things we're taught, to look at earnings, to look at economic reports, to look at jobless claims, to find out, what interest rates are doing, to find out what the direction of the company was. They had all these convoluted indicators on my screen. I was doing all the right things, following all the trading gurus and not making any money. It wasn't until I stripped away what my mentors called useless noise and really simplified things the way you just saw that my trading started to become consistent. And so that's what we want to instill in all of our students around the world. And I'm happy to say we have students in over 115 countries and in virtually every state in the United States. So ask yourself, we've just started the year. We're just a little over a month into the year. Do you think Strategy 4 can help your trading throughout 2025? I think after seeing what I shared with you today, your answer would be yes. So how would you like another strategy as well? Well, we have a great offer for you. In fact, it's a very special attendee discount for all of you attending today. Firstly, we're going to offer you strategy number 4. Now, it's a stock strategy, as it says there in the promo, but trust me, you can apply it to any market, any time frame. You'll get detailed instruction, the complete course rules. You'll learn all the entries, exits, and stop placements. But we're not going to stop there. Even though strategy number 4 is our most consistent strategy to date, how would you like another strategy? We're also going to throw in another great strategy we call strategy 3A. This is our premier continuation method. It's entirely different from strategy number 4 in that it's based on an indicator and not a pattern. Now, once again, when we first started teaching this method some years ago, it was mainly for the E-mini futures markets because that's where most of the volatility was. In order to catch these continuation trades, you need that type of volatility. But after we started teaching it, a number of our students told us, well, Steve, there's more volatility now in stocks and in futures as well as currency pairs. So they've applied it to anything. So don't be fooled by the title there of E-mini. It can be applied to virtually any market and any time frame as well. You'll learn all the complete strategy 3A rules, including entries, exits, and stops. This is the perfect strategy for trading volatile markets, regardless of what market you trade. In fact, let me give you a couple of examples of how well this trades. Here's an example in Lulu. Okay, this happened just about a month or so ago. Let's say you were watching this stock, you were tracking it, but you're saying, well, I need a little bit more action. I'm not convinced yet it's going to go higher, so I'm not going to do anything. And you walk away, or maybe you forget about it, and then you go back and look at it a week or two later, and it's taken off, right? Well, here's what strategy 3A can do. Strategy 3A actually would have identified a buy signal. Right here, you could have entered, and in 4 days, potentially captured 82 points. That's the beauty of strategy 3A. Now, this works to the downside as well. Let's say you were long this stock, ROP, Roper. Now, we know a lot of students don't like to go short. They don't feel comfortable buying the puts or going short the stock. So let's just say you were long this stock, and it's taken a little bit of a hit. It's going lower, but maybe that guy on TV said that it should stop here. This is some good support. So you're going to hold on to it. You think it's going to go higher, and by the year is over, you're going to make new highs. Okay, so you're excited about this. You're going to maybe buy some more. And then look what happens. The volatility kicks into the downside. Well, strategy 3A could have helped you at least exit by generating a sell signal right here. Now, once again, had you exited your position, you could have saved yourself a 50-point loss, or if you were more aggressive, you could have gone short, maybe bought the puts, and potentially captured 50 points. So this is a great, great method for trading really volatile markets. But we're not going to stop there, because everything you've seen today has been displayed using the platform that I developed with Pro Trader Strategies, my sister site. We call it the PTS Primo charting platform that actually teaches you how to trade. It's a great platform where you'll find things that I've taken in my 48 years of trading, things that you won't find on any other platform because they come from my years on the trading floor. So here's what we're going to do. We're actually going to throw in an extra bonus. Not only are you going to get those 2 initial strategies, but we're going to actually give you a full 6 months free of the platform. Remember, everything is 1 click away. You can click on the signal arrows. You can get the information. All the indicators are pre-formatted. There's nothing you have to do but learn the strategy and then check to see if you're validly identifying these setups. Now, on the platform, you're not only going to get strategy 4 and strategy 3A, you'll also get 4 different ways to tell the overall trend with our buy-sell line feature. You also get auto-generated exit levels. With 1 click, you'll see 1 technique for finding out where to exit a trade. A strength of trend tool I developed with Pro Trader Strategies that has an uncanny ability to tell you if there's more gas left in the tank for the trend to go either up or down, or if it's running out of steam. Now, this is just the tip of the iceberg. There are literally dozens more things that we don't have time to talk about you'll get along on our charts, because these are things, once again, that have taken me nearly 5 decades to accumulate, and that you'll only find on our platform, none of the major platforms, okay? Now, in addition to this, along with 6 months free of the platform, guess what? We're also going to give you another bonus. You're going to get the signal scanner, because you can scan for nightly setups. This is a great, great way, if you're not able to be in front of your computer all day, just to scan. In a matter of minutes, you'll see where all the strategy 4 setups are, along with strategy 3A setups. How about one more thing? We're also going to throw in our Secrets of a Stock Exchange Specialist book. This is a book I wrote. It goes into detail about when I traded during the crash of 1987 on a trade-by-trade basis, how difficult it was, and the lessons I learned while being on the floor. You'll get the PDF version of my book, Secrets of a Stock Exchange Specialist, as well, thrown in with all of these things. Okay, so let's break it down. We call this the Primo Strategy 2-pack, because you're going to get 2 strategies, strategy 4, strategy 3A. You're going to get 6 months free of our platform, which comes with a host of other different tips and techniques, along with the PDF version of my book, Secrets of a Stock Exchange Specialist. With these 4 things, we truly believe you'll be able to take your trading to the next level. Now, if we break it down, all of these things, plus what's included more on the platform, would cost you individually close to $7,100. That's how much there's jam-packed worth of information included in this offer. Here's what we're going to do, our association with Ken Calhoun. We're going to discount it tremendously. Just for a very limited time, we're going to drop it down to $297. Think of it, less than $300. You're going to get close to 5 decades of information that I've accumulated that's taken me that long to accumulate. Now, you're going to save over $6,800. But remember, this is for a limited time only. It's not going to last a month later, and you're not going to say, well, you know what? I think I'll take advantage of that $297 offer. Most likely, it'll be back up to over $7,000. So take advantage of this. This is our way of getting to know you, of really throwing you a lot of great information that's taken me years to accumulate, that you can have as soon as today and tomorrow. You can be up and running, okay? Invest in yourself. We know that you invest a lot in other things. A year from today, you will have wished you took advantage of this special offer. Here's how to take advantage of it. Contact my sister site, Pro Trader Strategies. They're in charge of all the discounts, of all the promotions, as well as all the tech support. You can give them a call. I would highly recommend giving them a call at 310-598-6677. They have trading consultants manning the phones right now. They would be more than happy to take your order over the phone or answer any question you may have. Now, that link you see at the very bottom is the link that will take you to the info page, as well as sign up if you'd like to sign up online. It's not a live link. I don't know if Ken's going to post a live link in the chat box or not, but you can copy and paste that onto a browser. And I'll leave this information up here. I don't want to take the next speaker's time. I think we're very close to my time running out. So I just really hope you learned something today, and I look forward to seeing all of you in our courses, okay? Ken, with that, I give it back to you.
Well, Stephen, that's a strong buy. I'd buy that. Only 297. That's at the cost of a stop. I mean, so yeah, you're a brilliant guy. You're really sharp presentation. It's your first time presenting here, and I was impressed. So thanks so much. You're very focused. You're very clear. You're very concise. You know what you're talking about. You're obviously an expert who can help. And for 297, this is a no-brainer. So that's a strong buy recommendation. And that's good. So
Thank you
good
so
job,
much. Thank you so much. Great. And I want to thank everyone for attending today. I look forward to seeing you in the course.
All right, thanks. Hey, come back, Stephen. You're invited back in the future if you
Okay.
want to. So
I sure
All right.
will.
Yeah, thanks, man. Take care. All right, traders. Well, that was good. We've got two great speakers so far, and both of their offerings are very economical and very high value. So, yeah, I try to bring good people to you guys that aren't charging thousands of dollars, that have good content, that know what they're talking about, and can really help. So, good stuff. All right. Well, let me get us back to the. Get back to my presentation here. Yeah, where we're at. I think that's it. Okay, can you folks see my screen? Quick question. We've got, let's see, Dan Passarelli's up next, so he'll be with us in just a minute. And looking forward to working with everybody. So we have two really good speakers so far. Always good to see everybody out there and working with each other. And we'll get underway here. Let's see, webinar chat. You can take a couple of quick minute break here. Let me, Let me find participants. There we go. All right. So Dan, are you here? Let me turn your mic on, and I'll make you the co-host and take
Yes,
it away.
sir.
Dan, yeah, see, there you are. Okay. Well, let's see. All right. Well, good to see you, man. Good to have you here.
Yeah, it's good to be here, my friend. Long time no see.
Yeah, it's been a long time. Let me make you co-host, and hopefully you can share your screen. It's always good to see good people working together. I was like, I like this because we're not like, some of these people that are, have low value presenters, have really high value presenters with great offers and other stuff. So I want to differentiate by being a genuine service to the trading industry, and folks like you and Stephen and Norman, our other speakers, are there. So Dan, can you share your screen? Just let me know.
Yes, sir. Let me just
How you
pull it
been,
up.
man? It's been a while. How you been? Been busy?
Yeah. I've been busy. I've been great. Everything is sunshine and rainbows, my friend.
It's been a long path. For those of us, we've been around for decades. It's a long run, but it's still fascinating. That's the neat thing. After 25 years, each day is still a new puzzle to solve, and I'm still fascinated with trading. And that's the only topic in the world that that and music and women. But I mean, for things, to be honest, but those are the three things: trading, women, and music. But it's still exciting after all these decades. So it's great. Anyway, Dan Passarelli from Market Take Care Mentoring, and one of the good guys out there. So take it away, Dan, and thanks for being here, man.
All right. Thanks, Ken. Much appreciated. All right. So today, I thought I would do something a little bit different today and sort of peel back some of the layers of the onion, if you will. Hopefully you like onions, or garlic. I love garlic. Yeah. Passarelli. What are you going to do? And I figured that I would show you some of the trades that I make several times a week for my, what I call my cycle and recycle adjustments. Now, before we get started, I need to point out options are not for everyone. Read characteristics and risks of standardized options before trading, and get a copy of that by emailing investorservices@theocc.com. Don't trade with money you're not prepared to lose. And we're just giving generalized information here today, not specific. So let me introduce myself for those who are new to me. My name is Dan Passarelli, and I am an author of a couple of the top option trading books out there. Trading Option Greeks is the one I'm most known for, but wrote another one, got another one in the works. Just what I do. I've written, seems like thousands of articles. And I'm a trader. I traded down on the trading floor. You can take the trader out of the trading floor, but you can't take the trading floor out of the trader, which is why I have a sick sense of humor. And I traded professionally for a long time and still trade every day in my own personal retail accounts. And 17 years ago now, holy cow, that's a long time, I founded Market Taker Mentoring, which is the leader in option trader education. And I collaborate with a lot of the good folks in the industry here, like Ken, for example, as well as a lot of the brokerage firms and exchanges globally as well. And I'm a family man. I got my wife, Kathleen, who, if you're one of our students, you're familiar with her, my 2 adult children. And I do things for fun besides trading. I like to run, kind of a foodie, if you will. Traveled, been all over the world, and I'm a music person myself, Ken. Now, I'm going to share some of my real trades with you, specifically trades in covered call and cash secured puts. Now, if you're a high-speed option trader and you've been trading for years and you trade really complex stuff, you might think, oh, well, those are boring, aren't they? No, those are exciting if you do them correctly. I love doing those to augment my investment returns. And I post all the trades that we're going to be looking at today to my Substack, which is wealthbuildingwithoptions.substack.com. And I'm going to see if Ken will let me paste this in the chat here. Oh, yeah. So you can click on that link right there. You can go there, and then what you do is subscribe, and you'll get our videos that I post there on covered calls and cash secured puts, our posts that I write up. Also, what else? My podcast. And if you become a paid subscriber, which is like a cup of coffee once a week, basically. If you become a paid subscriber, you also get these posts that I write up on all of my covered call and cash secured put adjustments as well. And we even throw in some credit spreads now and then. So go there, subscribe, and get all of that. Now, if you'll take a look here, these are the trades that I've done today. Now, these are 2 accounts that I manage, and they're both retirement accounts. I would say about a good 98% of my covered call and cash secured put trades are in my retirement account. I use them as a way to augment my buy and hold strategy investments to generate a greater return. But, there's kind of like a big secret to it. And the secret is you can't focus on any one trade. They're all part of a cycle. And then once one expires and that trade is over, it's a recycle if you get back into it. And that's sort of the big secret. And I mentioned that I have an upcoming book, and I'm just barely finished with chapter 1. So it's definitely still a ways off. But that's what the Substack is all about. It's wealth building with options by using covered calls and cash secured puts actually the right way. Like, here, hit the chat box here for me, or the questions box, or whatever it is, And let me know if you've ever traded covered calls or cash secured puts. Would you do that for me? Hit that chat box or question box, whichever one is available there, and give me a yes if you've ever traded covered calls or cash secured puts. Don says yes, covered calls. Joe, yes. Good, 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 good. All right. So we got a couple of yeses. Good. Well, for those of you who haven't, you're going to learn something great today. So I guess even before I get into this here, hold on a second. Even before I get into these trades, as I'm recognizing, maybe there's some folks who haven't traded covered calls to cash secured puts just yet. So what are they? Well, let's say you own a stock in your retirement account, we'll say, and you plan on holding it for a while, or maybe, hey, if it tops out, maybe you'll sell it. But it's part of your buy and hold strategy. What you can do is you can sell a call option that has a little bit of a higher strike, kind of like a target, like, hey, I might consider selling it if it gets to that point. You sell that call, and when you sell something, you get money, right? Like if you sell anything, sell your car, sell, stuff at the store you work at, you sell stuff, you get money, right? So when you sell that call, that cash gets put in your account, and if the stock doesn't go above that strike price, the option just expires at some point, you get to keep that money. If it does go above that strike price, you can do one of two things. You can just let it get assigned, and therefore you sell the stock at that strike price, which is higher. So you make money on the stock and still get to keep that premium. Or you can do what many people call an adjustment, or what I like to call just continuing on with the cycle in the life cycle of this trade. And you do a roll. You buy that one back, maybe for a profit, maybe for a scratch, maybe for a loss, but then you sell another one. And if you did lose on that one, you can, most of the time, get back everything you lost and more. And if not, then you just do still another cycle until you do get it back. So that's one of the things that I pride myself on having some expertise with. That's one of the main things that I teach as far as investors go when they want to incorporate options. A cash secured put is kind of just the opposite. It's where we sell a put at a strike that's low enough where if it gets down there, we'll value buy that stock. And if it doesn't get down there, well, that expires and we get to keep the premium. We get to keep the premium either way. So when you use these as sort of a cycle, if you get assigned, you sell at the high price and then you buy at the low price and sell at the high price, buy at the low price. Or if you're not buying or selling the stock, then you're just keeping the premiums. It's a really, really great system when it's used properly. Okay, so there's the background for those of you who are not yet quite familiar with this. These are the trades that I did today. So I had, and let's start from, let's start from the top, I guess. No, let's start from the bottom. Is more chronological order. So last week, I want to say, against the Amazon stock that I've had in my account for years, I sold the February 14th expiration 240 calls at some price. It's probably like, somewhere around $1.10 or something like that, let's just say. Well, February 14th, for those of you who are watching this live, that's tomorrow. And so what I did right after I got filled on that trade order is I put in a good till cancel order to buy that call back at 3 cents. And this morning I got filled on that good till cancel order. I felt my phone vibrate here on my desk and I said, oh, okay, well, yeah, I'm filled. I saw the Fidelity logo. I'm filled. Okay. So I went into my account, and now that call was gone, I took the bulk of the profit from it, 97% of the profit or whatever. I went and I sold another call. This time I rolled out to February 28th expiration, but I just kept the same strike, $240. and I took in another $1.20 a contract, which is $120 of money. It's actually $1.21, but it represents 68 cents of fees or commissions or whatever they call it. And, I did that also, as you can see here, there's two accounts. I manage them both. Same thing happened in the other account. Got filled in my good till cancel order, rolled out and sold the 240 call, same price. So then I decided I would scroll through my account and see what else needed some doing here. So this one, CLS, and by the way, when you do go to my Substack, I wrote up all of this into a post. So that'll summarize what we're talking about here. And I actually made that one free to everyone. So definitely go check that out. And then if you want to see future ones, subscribe. It's $30 a month. So so what I did is in CLS, that one's been a pretty aggressive stock, and I've been selling puts on it. Now on February 5th, it had a pretty sharp up day, and I bought those puts back. Oh no, I'm sorry. Wait a second. I actually didn't. Yeah. I bought those puts back at 5 cents on that day. Just a good till canceler getting hit. Now, why 5 cents on these and why 3 cents on these? Because Amazon options are extremely liquid and they trade in pennies, but CLS is not quite as liquid. And so it's better. I put in the nickel bid. So I got filled on that few days ago, and it's come down just a little bit, not a ton. But I decided to jump back in, and I sold 2 of the March 21st 110 strike puts for a total, what was that, 227 each, I guess it was, a total of 554 bucks. Okay, then there's a dividend here. We don't care about that. Now, finally, today, I was looking at, I just go through the whole list of all of my stocks, and PPC is one that I had this covered call on. And I just put in an order on this one to buy back at 5 cents, which I did, got filled on that. And then I turned around and I recycled that into another call. Bought back the February 21st 55 calls, sold the March 21st 55 calls. Paid 5 cents to get out of it and roll, and I collected a total of 65 cents a contract, which is $64 of money. Now, if you're paying attention, these were all the trades that I did today, but I actually did some a couple of days ago, which we're also going to look at. So I took in a total of $848. Now, these all, worked out textbook, just kind of perfectly how they're supposed to. So, that $848 represents just a new harvesting. It's basically when I closed these, that's locking in whatever I collected the last time. So I just do this over and over again. I sell calls or puts that expire in a week or 2 weeks, sometimes up to 4 weeks, and just continually do this. Now, though this is $848, it doesn't always work out just perfectly like this. Sometimes I have to buy them back. Like if Amazon ends up going over $240, the strike price, then I would risk getting assigned and having to sell my Amazon shares, which is okay. It'll be, at a near all-time high, and I've owned it for years. And then I can just turn around and sell a cash secured put, or I can just go in and I could buy these back. Now, remember, I sold them at $1.21 per contract. If I buy them back because they're in the money, let's say I have to buy them back at $2, locking in a loss of 80 cents a contract. That's okay. because then I can sell the 250 or 255 or 260 calls at more than 80 cents. And that whole cycle becomes just a longer term cycle in order to reap my profit. So it's a discovery that I made that I'm just like super excited to share with people. So sorry if I'm, coming across really nerded out about it, but it's just so, once you get into this mind frame of cycles and recycles, to me, that's where it really can click for people. Now, this was on February 11th, which was 2 days ago. And this was basically the same idea here. Apple, I actually bought those back last Friday on expiration when they were expiring. And I didn't take action and sell the new cycle of the call on Friday or on Monday. Instead, I did it on Tuesday, the 11th, and I took in 85 cents a contract for this count, 85 cents a contract for this count. So that's total of $84.32 once commissions and fees and such are extracted from that. So that's kind of like a recycle. That cycle ended on Friday. I let it go for a couple of days. And then because Apple was higher today, it was a better opportunity to jump back in and be able to sell a little bit of a higher strike. Now, PPC, oh yeah, that's right. This PPC one, that's pretty funny. I just sold this PPC covered call against the stock that I owned just on the 11th. I kind of forgot about that until looking at this. Now, notice if you go back here, I bought it back today for 5 cents. I sold it 2 days ago for 79 cents. That stock, Pilgrim's Pride, fell a little bit since then. And that's what enabled me, hold on a second. Yeah. So that's that. Okay. So remember, this is 2 days ago. Sold that call at 78 cents, but that stock fell between the 11th and today, the 13th. And I was actually able to buy it back for 5 cents today and then roll it out and collect another 64 cents. So on just that one stock in just 2 days, collected 79 cents, collected 64 cents, paid 5 cents. So I figured I would share these things with you to kind of open your eyes and open your mind to this new and arguably much better way of investing. There's another one of the little secrets that I learned from just doing this years and years and years. You do the same thing for 30 years and, you start to realize some things that it took you 30 years to really solidify in your brain. Is that covered calls actually work really super great in down markets for that reason. They work nice in sideways markets too, or nice in, mellow up markets. Don says, Dan, who gets the dividend declared by the underlying when selling covered calls or puts? Yeah. Okay. So covered calls, options are listed by an exchange. They're not listed by the company. Apple Corporation or Pilgrim's Pride or Royal Caribbean, they didn't choose to list these calls and puts. They might not even know the calls and puts are listed on their company. They don't even have to be notified about it. So the stock, if you own shares of a stock of a corporation that pays dividends, you get the dividend. If you're short a call against that stock, as long as you still own the stock on the X date, you get the dividend. If, however, you are short a put, which is a potential obligation to have to buy the stock later, well, then you don't get the dividend because you don't own the stock. As long as those shares are in your possession, you get the dividend. And if they're not in your possession, you don't. Plain and simple. Blue says confused. So yeah. And that, that's why I'm suggesting if this sounds interesting to you, and geez, I hope it does. I think it's really interesting. Then that's why I gave you a resource to just read up more on it. Okay, now, the final one that I want to talk about here today, and then I'm going to open this up to more questions, is Royal Caribbean, which turned out to be kind of an interesting one. Where'd Royal Caribbean close today? Hold on a second. I've got my Fidelity open on one. I got Thinkorswim open on this one. RCL. Yeah. So RCL today was at 213 on the 11th on the day of this trade. It closed about 256. So RCL, that one, I think it was the same thing. I think the put might have expired on the Friday before then. I don't know. I make a lot of trades. I don't remember every single thing. Let me see if I can spot it here. Yeah. I don't know when it expired, but because the stock ended up coming down over a couple of days, that just makes those puts more valuable. It makes those puts more valuable for two reasons. And it makes them less valuable for one reason. But overall, it makes them more valuable. It makes them more valuable because of delta, because when stocks go down, the value of puts go up. And when stocks go down, their implied volatility, which is a very fancy word for their relative cost, how cheap or expensive they are. When stocks go down, options, calls, or puts, that component of their pricing makes them worth relatively more. Now, I would have missed, let's see, when would I have done those? On the 7th, would have missed 2 days of time decay. Options lose value as time passes, and because we're short options here, that benefits us. But overall, it ended up working out real nice. So I ended up selling the 245 puts at $1.16, which is $116 minus commissions. And so, that's one where sometimes I'm short the puts, and sometimes I let the puts get assigned and then sell calls against it. And so just to bring this back over here, this one does pay a dividend, but we still have about a good 6 weeks before I have to worry about the dividend. So my plan, it's kind of a small dividend though, right? We got $2.20. It's about less than 1%. I'll make more selling the options probably than I will on collecting dividends. But if it does go down to 445, which there's a whole lot of support at or around or above that level, but if it does go down to 245, I'll probably just let that one get assigned and jump back in and start selling more calls against the newly acquired stock. All right. Do you have any questions about what I just covered? Can I expand upon any of it in any way? I'll just give you a second here. Dan, can a leap be used instead of the actual underlying stock? Yes. Technically, there's a different name for that position. That would be called a diagonal, or some people will call it a poor man's covered call because the leaps call costs less than the buying the stock. But, you know, the only thing that's tricky about doing it by using a leaps call instead of the stock itself is that if 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 you buy an option, well, if you buy a stock and sell a call and the call gets assigned, then the call is the obligation to sell that stock, and you have that stock. But if you're long an option and you have a call and the stock goes above the call strike and the call gets assigned, then you have to sell not the option, but shares. So now you end up being long a leaps call and short the stock. So you can do it. It just requires a little bit more management. Because like, I mean, with my covered calls and cash secured puts, I typically plan them so that I'm totally okay getting assigned. In fact, you know, this Royal Caribbean one, I kind of need to if I want to get the next dividend. So I still, you know, it's still very, very helpful to monitor them every day and try not to miss a day, at least looking at them. But with the diagonal, the poor man's covered call, you really absolutely have to look at them every single day. Great stuff. All right. Well, we have, oh, is Anna up after me? Great.
Yeah, Anka's up in just a few minutes. Yeah.
Yeah.
Hey,
So,
great presentation. Yeah, good job.
oh, thanks, man. I appreciate it.
Yeah.
So I guess I can pass it back to you if we don't have any more questions.
Okay. Well, good to learn from you. It's always good to hear what you got to say. And I'm ignorant about options, but you know it, so you can teach people. So thanks a lot. It's good job.
Yeah. Okay. I appreciate being on. We'll talk again soon.
Okay. Thanks, Dan. Appreciate it. Hey, Anka, are you there?
Hi, Ken. I am
Hey, how you doing?
here. Hi, Dan. How are
Hey.
you?
Good. How are you?
I'm doing great.
Awesome.
Oh, let me,
Oh, sorry. I just,
Anka, let me make you the co-host. So now you can hit share screen and hopefully you'll be able to share things. And good to
all
see you.
right,
There you
cool.
are. I see you. Hey, I like that top. That's
Awesome.
nice. What a nice top. It looks great.
Okay.
It even matches the paintings in the back. So that's great. So how you
Okay.
been? I know you're a really good trader, that you got really good content. And I know I like your focus on timing last time. That's something,
Yeah.
like you said, a lot of traders don't get, but it's critical. So it's not just
Oh,
technicals, it's timing around them, right? So it's really important.
thank you so much, Ken. You are doing a wonderful job as well.
Well, thanks.
Price action is king, right?
Right.
So,
Yeah,
yeah.
and teeny tiny stops. Yeah. Throw a lot of darts
Teeny
and
tiny stops. Yeah, that's what we're going to be talking today about. Yeah.
yeah, well, thanks so
All
much,
right.
Anka. I appreciate you being here. So traders, this is Anka Metcalf
Thank you
from
for
Trade Out Loud.
inviting me.
She's really smart. She's really good. So thanks for being here.
All right. Should I share the screen?
Yeah, go ahead. Take it away.
Okay. All right. So
There
Ken,
you go.
thank you so much. Yeah, for inviting me today.
Oh, good to have you. Yeah, you're one of the good people out there. So welcome aboard.
Thank you so much. I appreciate it. All right. So let's get started, everybody, right? I mean, Ken, can I get going?
Oh, absolutely. The floor is all yours.
Okay, thank you so much. Okay, so thank you again for inviting me. It is such a great treat to listen in to all of the presenters because even when you're a pro trader, you still learn a bunch of things, and you may specialize in a domain, but you're wanting to diversify, let's say, into options, right? And it's definitely a treat being here, and thank you so much. So today I will share what I do in my work. So my presentation is about working less, living more, and growing rich. That sounds good, right? So how to supercharge your trading day in just 1 hour. Now, I have to tell you that I have been, trading for a really long time, and it was not always the case to just trade an hour and be done. I would sit in front of the computer, not only for the whole duration of the market while it was open, but I was literally addicted to the market. I would wake up a couple hours before the market would open. I would do my homework, and then I would study all the trades that I have seen, all the trades that worked, all the trades that didn't work, all the trades that I took, all the trades that I paper traded. So I did a lot of analysis. So I devoted a lot of my time into trading because I absolutely loved it. And there was one more thing. I wanted to get rid of the commute that I was doing every single day. It took me about 3 hours every single day to go to work and come back from work. So now literally I trade less than half of the commute time that I was when I was working full time. So I did work in the financial industry for a very long time, and actually my whole entire career. I'm a professional independent trader that is focused on trading stocks, futures, and day trading, investing, and swing trading. I have been doing this successfully full time for 20 years. So that means that 20 years ago, I quit my job just to get into this. And yes, it was a long road, but if you put the effort, if you dedicate the time, you're going to make it work for you. And the sooner you begin, the faster you're going to see the rewards. So prior to becoming a professional independent trader, I come with 10 plus years in investment banking. I'm the CEO and founder of TradeOutloud.com, which is a trading education that is focused on educating individuals how to day trade, swing trade, and actively invest in the market. We do offer not only trading education, but we do offer services that back up the education that we provide for day trading and for swing trading. And I specialize in high velocity trades, and I am going to show you today, because today was the perfect example when the market finally snapped a little bit higher, right? And it's holding the highs at this point in time. We're just about to, right now, 6 o'clock. So trading session has just started into the futures market, and I'm very excited to see where the market is at, because it could potentially have another leg higher, another leg up for tomorrow. So we could see higher price action in the overnight trading session. And basically, I'm the designer of an institutional proprietary trading system. And the reason why I'm saying I'm the designer is because I cannot take credit for technical analysis, right? But I did put a spin on the way I do things. So I pay attention to price support resistance, and basically I pay attention to the 8 layers of price support resistance. So not only on supply and demand, but I look at confluence levels, I look at trends. I'm a trend trader. I find that it's so much easier to trade with the trend, even when we're having a sideways market like we had in NASDAQ and the S&P, right? And Qs, the SPYs, if you guys are trading stocks or futures, definitely you have seen that the market has been a little bit more challenging. And I focus on specific trigger times, just like Ken mentioned a little bit earlier. So I like to time my trades. And I have some inflection points throughout the morning session that are working a little bit better than the rest of the day. So I will share some of these timings with you guys in a few seconds when I'm going to be sharing some charts. And I also pay attention to specific price zones. There are specific price zones, and in fact, there are only 4 specific price zones on the technical chart that suggest institutional buying or selling, because they cannot buy bulk amount of shares or contracts at the same time. So they scale in, and these are the scale in areas, and also the scale out areas. So they're very handy to know, because these are areas that could potentially predict a pullback, right? Because once you take profits, institutions leave a dent, right? So the price action is pulling back a little bit. And also chart synchronicity and divergency. Today, again, was another example of that divergency and synchronicity, because we did have some power players in NASDAQ and ES, and then we had some weak indices in the Dow and Russell, right? So until they come into a balance somewhat, they are a little bit fleecy into the morning session. But then ultimately, if everything is, kind of, on the same pace, then you're seeing a much organized buying process or selling process. But it's just, the morning fleecing that always takes the toll on price sometimes, and that is dependent on the stocks, underlying stocks under each index. All right, so let's get into it. By the way, if you want to find out more about my work and what I do and my company, you could go to TradeOutloud.com and find out more information. You can visit me on social media, on X, Facebook, and also on YouTube. So today we're going to be talking about how we crush it in the power hour. So basically, I'm also going to explain what the power hour is in a few seconds. But before that, my goal today is for you to understand the process and where I come from. So how do I approach the market in the power hour? So that means into the first hour of the day. So how would you like to find out how I made 180 points today in NASDAQ? So it was fairly, it was fairly not complicated today. It was not such a complicated session that we had in yesterday's trading session, because yesterday we had the market that pulled back. But even yesterday, I'm going to show you the stats. We managed to pull 100 points out of NASDAQ long, right? Okay, so it's all about confluence, and it's all about the setups, and it's all about the timing. So what happened this morning? Let me walk you through. Okay, so we had the 8:30 numbers, right? Yesterday and today, we had the CPI numbers and the PPI numbers today, and the market soared higher, right? But at the same time, it went higher and left a topping tail, right? But then very quickly after, within the next 2 minutes, the market pushed back up again. So it proved that it wants to ignite a little bit higher, right? And the clue for that was the base that it left from 8:30 all the way to the 9:30, right? So it was an hour in which you could see here that we had a really beautiful base into the highs from the numbers that were communicated. So my goal was to actually take the trade off the open, but it was so fast. It happened so fast because it happened literally in the first 30 seconds that I didn't get a chance to grab the long, because my initial reaction was to get it long right here where I'm holding my arrow, to place a tight stop below, and then have the zip back up into a target level. But guess what? I waited, right? Because I missed this chance. I was like, you can't get them all. So now, because I typically like to take trades in the first 2 minutes because I specialize in this. Remember, I have over 20 years in which I have literally put all my effort into trading only 1 hour. So I waited for the pullback, definitely not in a rush. I was looking for a good momentum, and I know what I was looking for. I was looking for a pullback into the 945, because there are some reaction times into the market. The first reaction time comes at 932. The second reaction time comes into 945, and the third reaction time comes into 1030, and then the last one. No, it's okay. So it's 10 o'clock and 10:30. Sorry about that. Okay. So it's 9:32 to 9:35. It is 9:45, 10 o'clock and 10:30. Okay. Just want to make sure that I have that right with you guys. All right. So then I saw the price action, soar. I waited for the pullback, and I knew that I was going to get a chance somewhere into the support zone. We had a kind of like a hefty support zone right here. You can see we also have the 200 SMA. We had a bunch of moving averages that were holding the price elevated, and they were offering a safety net for price. So I really love that. So the next thing that I was looking for is the volatility to contract. So I was looking for smaller candles. I don't like to get in on wider candles, because when you get in on wider candle formation, it means that you have a wider stop. So I didn't want to have that. So I waited for the opportunity for a tighter candle, for a smaller candle. Remember, the biggest moves in the market always come from the tiniest narrow range candles. So I waited for this candle that you guys see here. So typically I look for a pullback of 3 to 4 or 5 bars into support. So I counted 1, 2, 3. Here was the fourth one, and it was right into support. It was at the desired time of 9:45. And there we have it. We had our entry. You could see it. It was right here. We had our stop here, and we were targeting the prior high for for the trade, for the price action, for the reward. Okay. So with this trade, you can see it right here. We locked in 80 points in this trade right here. It was a beautiful trade. And not only that, but we were able to secure over almost 3.5 hours. So that is a really impressive result for a first trade into the morning, right? Because we're used to a market that is not really continuing higher. We're used to a very boring stall, a market that doesn't offer much continuation, right? Because let's face it, we're still range bound. All right. And then after we closed the trade here, I noticed that there was this pullback. So there was a volatility pullback. And basically this was a little bit of a rug pull of partial profits taken by the institutional traders. So we waited until this subsided. And then we had another opportunity here. Do you guys see this candle right here? Isn't this very similar to the candle that we had here? So not only that it's a doji candle, but it's an inside candle that shows compression from the wider volatility. It was a tighter price action. So there we go. We had a second trade This was our entry. This was our stop. We apply a little bit wider stop because as you're progressing throughout the day, you need to apply a little bit wider stops in order not to get fleeced. And especially in the futures market, you could totally get killed if you have really tight stops, especially as you're going throughout the day. But notice when this trade started to happen shortly after 10 o'clock. So it was into the 10 o'clock frame, and it was into that specific area in which you can expect a reaction from the market. So we went for a target all the way to 22,000, 2250, and then we went for a target of 22,100. But guess what? We took profits here, we trailed, so we achieved all the targets, and then we finally trailed out into 22,030, but after achieving all the targets and taking profits into the targets here what at 22,050, we took the bulk out, and then we left some fun contracts in just to see if we could ride it higher with a very tight stop and with a very tight trail. So you can see here that altogether trade 1 and trade 2 accumulated over 5.5 bars. Now, if you would trade with about $500 per trade, you would have made today $2,700. So it was a relatively, type of very good day. It was a day of continuation. It was a breath of fresh air. It was an easy day to trade today. It wasn't complicated. Yesterday was a little bit tedious because we had the pullback and everybody was freaking out. But no, we went into a power mode. So we went long because we identify support in NASDAQ. Again, it was tapping into a 200 SMA on a 1-hour chart. So that was a bounce zone. All right, so day trading, what is day trading? Day trading is basically income generation, right? Because you're in and out. And basically what I wanted to show you guys here is that we took our first trade at 9:45, and by 10:30, we were completely out, right? So it basically less than an hour. I actually produced my income within an hour. 1 hour basically watching, or an hour and a half just watching, but basically it's like in and out and done. So trading is basically the income producing style of trading. It's that instant gratification. And this is how you also trade your way to wealth, because everything that you make in day trading allows you to pay your bills, pay your mortgage, do whatever payments that you need to make, pay off your credit cards. And then it allows you, with the extra money that you have left over, to put it in a swing trading account or compound into your investing account. So today we made, like I said, 5.5 bars. On a $500 risk, that's a $2,700 profit. I think that's really outstanding, right? All right, so let's move on, and let me show you something that is very interesting, and this is the month of February. So as you can see here, for the month of February, we have pretty much a lot of winning trades. We only had like 2 trades where we lost some money, but all in all, look at the risk. Look at the ratio. I mean, the win ratio is outstanding. So today we made 180 points. Yesterday we made 100 points. The day before that, 30, 45, 30, 26, 100, and 100 here. So it has become, I would say this is pretty much the norm on a high velocity move. But I wanted to highlight the fact that the market is still in a sideways range, and we were able to score these rewards in a sideways range. Imagine when the price action is breaking out or breaking down, and when we have a continuation of the trend or even a rejection of the trend, you're going to make much more money when you have a clear situation. And let's not forget that February is still in a range. But how about January? January was still in a range. It was a really bad range. And in fact, from December, we have been trading sideways in NASDAQ and S&P and Russell, in the Dow. Everything was very, very choppy. And even with this choppiness, we managed to score big. Needless to say, we are still in a trading gold that we initiated on January 16th. And should I say that we were watching this gold trade, and I'm not exaggerating, for almost 2 months before we actually got in. So we stalked it. Finally, we got our entry. We got our trigger. So patience is everything. And we got the trade here at 27.62. I don't know if you know, but today It was like it was like the superstar. It was still trading 27.50 and higher. So basically only on that trade alone. So it's one of these things that, and it happens to us every single time in the trading room, that we have one of these trades that is literally a home run that literally makes our quarter. So gold is up over 190 points from our entry, and that is a $19,000 per contract. And of course, if you position size, depending on your size, you're either going to get it with full size contracts or you are going to get it with micros. But even if you're trading micros, guys, this is outstanding because this is $1,900 if you're trading with one micro, right? But you have to position size. You're not going to trade with one standard contract or one standard micros because you're going to position size. So how do you get to the point of consistency and profitability? Well, first of all, it's all about risk. Risk is the most important thing. I think it's most important than the strategy that you apply. Because the strategy, you can wing it, you can adapt it, you can do something with it. But if you don't have the concept of the risk, that is going to really produce a dent in your account. And this is the #1 cause of traders blowing up their accounts. So how do you determine the risk? Determining your risk and risk tolerance, these are two different things, right? So risk is depending on your account size, and risk tolerance is depending on your account size, but also your ability to hold the trade into the targets or even losing on a trade. How does that make you feel? So it's your about your own personal tolerance. Because you could be trading, like say an IRA account, which is a higher account, right? A higher amount and that you have in your account, and you may not be ready to trade that size. So you're going to go down in size, right? So that means adapting your risk tolerance, but definitely your risk is correlated to your account size, and traders should not risk more than 1 to 2% per trade, especially in day trading. I only risk 1%. So all my trades are with 1%. And if you're going to continue to risk 1%, then you're going to have a really long life into the market. You're going to find out that you're going to learn more if you're in the developing stage of your trading. So it's much beneficial to use smaller size. Don't rush to get into trades, and don't rush to get 5% or 10% a trade. And I've seen examples in the futures market when we've done a lot of our open houses where traders came outside of our trading room, joined, and they were risking even 50% of their account and even more. We had one person risk about 75%. Luckily, the trade worked. I remember it was last year, and this lady was literally, risking, like she told us afterwards, about 70-something% of her account. She had a very small account, and she bet everything on the trade that I called. Luckily, the trade worked, but you can imagine, like, if the trade hadn't worked, she would have blown up her account. So don't do that. And then after that, you have to determine that now that you know that exact amount, whether it's 1% or 2%, everybody's different. I'm not telling you exactly what you need to do. You know better what you need to do for your account, but you need to understand the risk that you're applying. So not only that, the risk that you're applying, but you need to position size to as far as how many contracts, or even if you're trading stocks, how many shares or contracts you can fit into that account. And there are various calculators out there. We actually offer a calculator for our traders to easily identify, or you can actually print a risk sheet for yourself, a little cheat sheet with the size that you're trading, the contracts, and everything else. So it's easy. So when you're trading, you don't have to focus on math, but you just focus on the pattern. And another very important element is deciding how many trades you will take per day, right? So I typically allow myself 5 to 6 trades a day. So that means that this 1% that I'm risking per day could very easily become 6%. So that's why I'm saying the more you risk, the more you have the odds of, either, losing more money in a day, or, it's kind of like that chews up your account. So very important. These things are must haves for your trading plan. Your trading plan should be in front of you at least in the first 6 months, first year. Shouldn't be a novel. Should be on a little, let's say, a little piece of paper that is right on your desk. Should not be in a drawer or anything. So make sure the size, 1% or 2% or whatever percent you decide, but I would suggest 1%. That worked for me and works for me. Oh, and one of the things that I wanted to add here is that even if I allow myself 6 trades a day, do you think that I'm taking 6 trades every single day? No. If the environment is not right, I'm not even taking 1 trade. For example, yesterday I only had 1 trade. Today I had 2 trades. So typically I would take like 1 trade and done. So risk to reward ratio is very important. This is actually the first trade that we executed this morning. And you can see here that we had a very small risk, and then the reward was actually more than 3 times. So you have to make sure that the chart is dictating where the price may go, right? So, you know, it's okay if you say like, yeah, I mean, it's not okay. It's, you know, a lot of traders consider that, okay, I'm going to take this trade. I want 3 hours out of it, but you don't see it technically on the chart. So that's going to be the biggest problem because you're not technically seeing it. We technically saw here the target as being into the prior high. So that's why we took the trade. And then on the second trade, you can see here, we had about 2 hours into this trade. This was the risk that we applied. And then this was the reward. So we always apply 2 to 1 or 3 to 1 risk to reward ratio. 1 to 1 is a recipe for disaster because it's going to take you a very long time to come out of a losing streak. So if you want to start trading, but you really don't know where to start, I can help you, get there. So we have a trading room. We have hundreds of traders in our trading room that we help every single day. And not only that we help, but I share my trades. So I trade and hence the name Trade Out Loud. I'm trading out loud and I'm sharing the trades that I'm taking each and every single day. So sometimes you're even getting a 5-minute workday. This is an example here of some CPI numbers that were out in a few months ago. And you can see here that typically you're always offering a big shooting bar right after the data is out. And yes, it's fine if you trade that. We sometimes trade that. We didn't do that today, but because the market wasn't really set up for the right criteria for a play into the CPI or the PPI numbers. But when we have the proper environment, the proper trend with us, we do it. And then here, for example, you had 2 opportunities to make money. You had an opportunity here and you had another opportunity here. Look at the pullback here, very similar to what we had today. So you would have the 3-bar pullback into support. It's into a rising 20 simple moving average. You have the rotation. You have the same inside bar. This is very powerful because it shows you that contraction. And then you can see here how the price actually moved higher. So it's either a 5-minute workday before the market even opens, or you could have, a perfect day into the power hour. Here are some examples of the 5-minute workday. And in fact, here it shows the market participating with vengeance into the move. And by the way, today, like I said, the environment wasn't there. And you probably saw that the price action shot up a little bit and then came back, and then it started to move a little bit higher. So these are some examples from the trading room. So why do you want to trade for a living? First of all, you don't need a boss. You don't need a commute, no customers, no clients, no emails. You don't have to post on social media. You don't have to have a following on social media. It is just you and your computer, and I can teach you how to do it. So if you want to turn your computer into your personal ATM, this is the way to do it. And this is the perfect time to learn how to trade and learn your way to financial freedom. The markets will remain very volatile through 2025 because FOMC rate cuts, are they going to cut more rates? I mean, we saw some hot numbers off the CPI and the PPIs, right? We may not see rate cuts until December. That was the word on Wall Street. Inflation is still high. Massive layoffs continue. I don't know if you're keeping an eye, but massive layoffs are out there. And of course, the thing is that it's my absolute favorite, the trade wars. Bring back the trade wars because we're ready to trade them. And if you have been trading under President Trump in 2016 and 2020, and you haven't been trading then, you're for a treat now because the market is going to be super, super, super volatile. And we had a wonderful trading environment back then. So the key to winning is to win more and win more than you lose, right? So you have to lose just a little bit and make more money than you lose. You need to position size. You need to do the proper technical analysis and also pay attention to not to fundamentals as much, but to economic releases, because a lot of times beginner traders, get in trades. Let's say they focus on the New York trading session open, and then boom, you get hit with some 9:45 numbers, or you get hit with some 10 a.m. numbers, and they don't even know what happened to the market. So again, pay very close attention to the economic releases, trade the effects of the news and not the news itself. Try to have a clean, precise execution, have in your trading plan a strategy that you are successful with implementing, and of course, money management. Let the market take you out. Don't ever take yourself out of the trade, because this is the biggest mistake. Whenever you decide a target or you decide target levels, you have to have at least 2 or 3 or 4 targets, and then based on what you see on the technical chart. And when you achieve target 1 or 2, a lot of times, a lot of traders just take all their profits out because they take themselves out of the trade and they leave a lot of money on the table. Have a plan as to when you achieve target 1, just take a little bit out, try to bring your stop at a break even or something like that until you get used to the market pressure. What you need to get started, well, you have to have a burning desire. You have to really love what you're doing, and you want it, and you have to want it really, really bad. You need to have a good foundation, a good education. So you're not going to succeed at anything without education. Even if you jump from service to trading or what have you, or follow someone, you're never going to achieve that consistency because you're not going to have confidence in the system. You have to have discipline to follow the plan. You need to have patience to wait for the setup. See, this is one thing that I really don't understand. Traders that come to me and say, I don't have patience, I just jumped into the trade. I mean, you jumped in the trade because you are, and we're going here to number 2, you're uneducated, right? You're an uneducated trader, not knowing where a trigger point is, where you need to place your stop, and what pattern you need to wait for. Because if you knew all that, you would not have jumped into trades. And you need to be 100% focused, because like I said, I only trade in the morning in the power hour. So there are no distractions. I literally lock my doors. I don't browse anything. I don't answer the phone. I'm not paying attention to social media. It's that my time, my Zen time to make trading work for me. And of course, you need to have conviction, and you have to have a millionaire mindset, because if you're coming into the market and say, oh, another day into the market, this is not going to go well. What if I'm going to lose money in the market? So again, it's about calculated risk, because everybody's asking me, is trading risky? And I'm like, yeah, you know what? Risky is crossing the street. Risky is driving. Risky is drinking a glass of water. Risky is when you swim, right? You can drown. So trading does have a calculated risk. So I would say it's riskier than driving your car. And of course, you need to have perseverance. So the power hour is basically, and we're going to wrap this up really quickly right now. The power hour refers to the first hour in the morning that has the most volume and the most volatility and the most significant moves that are going to happen within this time. So during this time, the market is going to react to overnight news, right? Whatever happened in the Asian session, whatever it happened into the London session, it's going to react off the numbers that are coming from New York before the New York session, right? CPI data, PPI data like we had this week, economic data releases, and other market moving events. So the futures trading room, I have a great offer for you guys today. So the futures trading room has been around since 2017. And if you want to trade an institutional grade trading system, you're more than welcome to come and trade with me. And the trading room is for you only if you're losing money into the market. And if you don't have a system, if you don't know where to start, if you don't have a process that eliminates emotion, if you're stressful, because our method is stress-free, we use limit orders, so it's nothing rushed, it's nothing, super fast-paced. It's just like everything is very calm. And if you're lacking confidence in the market, I can literally bring a lot of clarity, because we do a pre-market game plan. Also, if you need a holding hand, we hold your hand through the whole process of the trade, from the entry point all the way through the exit. And if you want to develop healthy trading habits, this is the place to do it. So if you want to join us, I'm gonna put the link right here in the room for you guys. Let's see if I have it. All right, here we go. Boom. All right, so if you're ready to join us, you could go to tradeoutloud.com, go under services, and once you join, you're going to be able to get in the room and trade with us every single morning. You're also going to have access to the performance tracker. We're also going to provide you with a risk management tool with the risk calculator in here. That's going to be super helpful. All right, my time is up. So thanks so much, Ken, for inviting me here today. Okay, for some reason, I'm not hearing you.
Battery 50%.
Okay.
Connected to ANA and Cecilia's iPad.
All right, so yeah, I'm not having sound. I don't know why.
Hi, Ken.
All right, don't have sound.
Okay.
Thanks, Ken.
Hi, Ken. Can you hear me?
Okay, I can hear you now.
Great. Okay. Yeah. Can you hear Ken?
Oh, wait, there we go. I have to turn the microphone on. Details, technology, then the microphone button. Anyway, great to see you here, Steve Nison, from candlecharts.com, the originator of being able to use candlestick charts for trading in the Western world here. And great to see you, Steve. How have you been?
Good, good. Have to use another computer, so we'll see what happens. So, yeah. Anyway.
Okay.
All right. So, what do I do? Share screen again when?
Right.
Okay. All right. So, share screen and then have my PowerPoint on.
Yep, that should do it.
Is it sharing?
Not yet.
Okay. Let me. So, do share screen.
Mm-hmm.
One participant can share at a time.
Right.
Oh, there we go. Okay. There we go. Okay. Good.
Yep, you're good.
Great. Okay. Thanks, Ken.
Okay, thanks.
Okay.
Thanks.
Thanks, everybody, for joining me at this supper time, at least in the New Jersey, the Northeast area. So we're going to discuss our my trading triad. And before we do that, as always, we have a risk disclosure, essentially that there's a risk of loss of trading in any market at any time frame. So if you want to see the whole disclosure, you can go to this link over here. And one of the main reasons, and I'm going to assume most of you are familiar with candlestick charts, but some of you may not. They're really easy to understand. I'll spend a minute or two just going over the basic construction and the psychological reasons why candle charts work so well. The main aspect of the candlestick charts is they give you early reversals. And when properly used, and that's what our education is about, to make sure our students properly use the candlestick charts, it helps you have safety first trading, know what trades, what to avoid, because at the end of the day, it's not only how much you make, but how much you don't lose. And because the candlestick charts uses the same data as the old fashioned, at least here in the West, bar charts, open, high, low, and close, any Western technique you use, moving averages, trend lines, oscillators, whatever you use, you should be adding them to candlestick charts. And actually, the East and the West are my first and second leg of the trading triad. By the way, triad is Latin word for three. And we're going to look at this at the three legs. I compare it to a three-legged stool. You take away one leg and the stool falls over. So the candle charts work in all markets, in all time frames. My books have been translated into actually 21 languages now. And we at candlecharts.com have students from 85 countries. And as I mentioned before, candle charts work in all markets and all time frames, whether it's equities, Forex, cryptos. You use them intraday, and that's Ken's focus, as you all know. He's a real expert on that. I mainly look at the daily, and sometimes I'll look at the hourly, but you can use them for trading, short-term trading, intraday trading, swing trading, or even longer term investments if you want to look at a weekly chart. And a little background, I was the one who originally revealed candle charts to the Western world. These are some of the Japanese books I had translated back in the late 80s, early 90s. And this is my work desk, or it was my work desk. And all these pages here are the English translations of the dozen and more books. And it took a year for my translator to translate everything. And then it took me a year to compile this and make it into a logical order. And it's a good thing I love challenges. So back then I was working for a brokerage firm, and I was giving trade recommendations to the brokers. And I didn't tell them I was starting to do that based on candlestick charts because I had not written my book yet. And the thing that really helped me keep my incentive to do all this work was this was just an example of my trading results. Back then we had maybe 13 analysts giving trade recommendations, and this was just a sample of P&L. And you could see, although my name is last on the list, I had the best P&L. And that was because of candlestick charts. I didn't let the brokers know I was timing the trades based on that. But again, it gave me the incentive because I was paying for everything myself. I was paying for all the translations. And obviously, time is a very, very valuable resource. So it really incentivized me. So as I mentioned before, candlesticks give you early reversals. And how many of us really feel this way sometimes? Right time, right place, two exits back. And as part of the introduction, I had mentioned safety first trading. And I love this quote. I'm sure many of you are familiar with this. Warren Buffett's rules of money management. Okay, rule 1, don't lose money. And rule 2, don't forget rule 1. So not only do candles help you hopefully improve your confidence for trading and investing, but also helps preserve your pocketbook by knowing when to get out of particular trades or investments or when to avoid them. And a key aspect of knowing when to avoid is actually going to be discussed a little later in the session, the third leg of my trading triad, risk reward. But we'll get to that in a little bit. And as I alluded to before, candle charts, like a bar chart, shows the price, uses the same data. But because of the way the candlestick charts are drawn, they show you who's in charge between the bulls and the bears. And we could use candlesticks to read the market psychology, even with a basic understanding of candle charts. So here we have, I'm just going to do this really quickly, a white real body where many of you have depending on your charting service, it could be a green real body, there's a black real body. And essentially the real body is a relationship between the opening and the closing. The high of the white real body, green real body is the close, the low is the opening, and the opposite here. Again, I'm just going to go through this very, very quickly. So those are the ranges. You know, this is a potentially bullish session, bearish session. And of course, we have the shadows and the real body. And doji are sessions where the opening and closing are the same. And we'll look at doji, how they're used in a couple of minutes. But this is a really nice part of the hundreds of pages I have translated. And I'm just going to kind of skim this for time. Japanese analysis is on a more micro scale, and the psychological analysis of the investor, or in our case, the trader, becomes an important factor. So here, who's in control, right? Long white real body. Again, it could be a green real body, depending on your charting service. Obviously, the bulls are in control. Here, the bears are in control. Okay, who's in control here with this doji? The opening and closing are the same. Well, neither. It's a balance of forces. And a doji during a rally, and a lot of misuses with the doji, because there are a lot of doji in the markets. By the way, the plural of doji or doji. It doesn't mean the market's going to go from up to down. If there's a doji during a rally, it just means the trend has gone from up to neutral. But just knowing something as basic as a doji is really important to help you preserve capital. So for example, here, okay, we have, this is a hammer. Okay, we won't have time to go into this. Long lower shadow candle confirming support is potentially bullish. All right, and this slide shows you the advantages of candles. So here we have a MACD crossover, and this is where you get the bullish signal on the MACD. Here's where you get the bullish signal on the candles, right? And notice what happened here. There's a doji. Now, although there's a doji, this is a new high close for the move. So normally on the old-fashioned bar charts, we would say, okay, it's a new high close. I'm 100% bullish, but a doji is telling us the market's tired. There's no way to forecast it's going to fall 100%, but it's telling us the market's tired. So the bearish confirmation comes by a close under the doji. So that would potentially bearish signal, but here you would know not to add to long positions. Again, safety first trading, all right? And here's where it would have told you to get out with the MACD. Once again, early reversals. Okay, just very quickly, this is a falling window, one of my favorite candlestick signals. It's a bearish indication. And so it confirms the top over here, especially with the market topping out. Here we have the moving average. When a shorter term moving average crosses under the longer term moving average, it's negative. I look at the 50 and 100-day moving average. The Japanese call it bear cross, but this is a Western signal. So here we got the reversal here instead of up here. And let's say, you did 100 shares, okay? You actually made an extra $5,000 thanks to the candle charts. And with this high price stock, we're probably looking at doing a put, but again, a very quick, easy reversal signal with the candle charts. So the importance of education, okay? Here we had one of our students, he says he was watching Mad Money, Jim Cramer, a lot of us watch that. Okay, he spoke about a stock he liked, and I don't have the stocks here or the dates because candles work in all markets and all time frames, the universality of them. So it really doesn't matter what market this was. So we checked out with a candle chart and it formed a doji right over here. All right, this is really a shooting star, but if the real body is so small, it's considered a doji. And he was able to, although Primo liked it, technically, this was a warning signal. All right, so he knew not to buy over here. First of all, it was a doji, the market's tired, and look at this long upper shadow confirming a resistance area. So once again, money in the pocket. So, okay, here we have a market in a downtrend. Okay, if this was a bar chart, lower lows, lower closes, lower lows, but this is a bullish signal, potentially bullish signal, okay, a hammer, and it's telling us potentially the market's bottoming out. Normally, and I'll discuss this in a minute, I like to see a candlestick signal confirming, a prior support area. But here, although this was a bear trend, this would not be an area to consider selling. And in fact, you might even consider buying. I'd probably, because the lows here are tending to confirm support here, I probably keep a protective stop down at these lows right over here. Okay. And even if you didn't know this was a hammer, okay, think about it. What are these long lower shadows showing us? As the market gets to 20, okay, 19 3/4 in that area, there's buying coming in. Open, okay, the open over here, cuts down here, closes, it closes lower, it bounced, it bounced, it bounced. Again, we're reading the psychology of the market based on the shape of the candlestick line. Okay, here we have actually we looked at this one before, but this is looking at an option because candles are great for timing. Implied volatility is really important, but market direction is multiple times and more important for option trading than implied volatility. So here this was the market we looked at before, but now we're going to look at it from an option scenario. So let's say you're buying on this candlestick signal. All right, it's confirming a support area I mentioned in the prior slide. I like a candlestick signal confirming a Western signal. So we have that. Let's imagine you buy there. All right, and we use the the doji over here to exit the market. These are theoretical option prices. Okay, it's 447. So potential profit, $52 a share. Now, let's say we use that crossover. We had looked at this slide before. We based on a MACD, which would mean buying over here. Okay, at 418. Okay, we exit at the doji. We still use the doji to exit. So here we have a potential profit of $29 a share. So by using the candlesticks for timing, we generated an extra $23 a share per profit, per share profit. That's what it's all about, the early reversal signals. And I like looking at prior lows and highs like this, but you may have something else. You may have a moving average that you find works well as support. And if a candlestick signal confirms that, I would be more aggressive on the trade, right? Okay, remember, candles are trend dependent. And this is why education is so important. So here we have a hammer. We actually have a candle scanning software that automatically picks out the candlestick signals based on my criteria. And we call it Nison candle scanner. And so it was picked up as a hammer on NCS, Nison candle scanner. And notice these were not hammers, but aren't the lines the same shape, right? Long lower shadow, small real body at the top end of the trading range. And by the way, a hammer could be a black or white real body or green or red real body. Why was these not hammers? Because a hammer has to come after a downtrend. All right. In fact, with NCS, we take trend into account, but that's not the important part. The important part, you need to take trend into account. For those who don't understand this basic concept, they may be buying here. They see on the internet, they see the shaped line and they say, oh, it says it's a hammer. I'm going to be buying it here. And these are not hammers. This is a hammer. Just to give you a little heads up, a little nuance that really could separate you from the competition. So here's a particular trade I made a while ago. So this was a hammer. And one of the great things about the candlestick signals is you could use the low of the candlestick signal as a support level, all right? So question, okay, the lower the hammer was here, okay? I actually bought over here. And because to me, that was a successful confirmation. So the lower the hammer would have been a stop out area. Well, my question, actually, would you have a stop under the low here, or would you have a stop somewhere else? And again, you could think about this for a little bit, especially if you're watching it on a recording. You could just pause it. And the answer is, I had a stop under here. And the reason for that, so let's say the low here was 61.40 and the low here was 61.30. Wouldn't it be really upsetting to go have the market go under here? All right. Go down, go here. Yes, and break this support, but hold that support. And usually I have stops under the even numbers. So I had a stop under here and my target was up here. And we'll look at that risk reward. Really, really important concept. This was a good risk reward trade. If it wasn't, I wouldn't do the trade. And we'll look at the aspect. So here, I had to stop under the even number. Okay. And the target was reached. All right. Okay. Here's the opposite of the hammer. Okay. Shooting star, confirming resistance area. All right. This is a gravestone doji. I like this one. It's a doji, but the open low, high and low lows are right near the low of the session. All right. And then we're going to look at engulfing patterns very, very quickly. And we're focusing really on candles now. When a white real body wraps around a black real body, it's a negative, it's a bullish signal, bullish engulfing pattern. This is a nice buying opportunity because it confirms the low over there. Okay. The importance of information, lack of information, or the wrong information. So I had this cartoon made up. My other son uses candle charts. So this is what this session is all about, and everything else Ken is doing today, and actually pretty much everything else he does with education. So we very briefly looked at candlestick charting techniques. We have to look at Western technicals also. Okay. This was one of the books I had translated, where you could see the candlesticks and they have Western signals on them. So here we have a hammer confirming a support area. This is what I look for. All right, a candle signal confirming a Western signal. It's rare that I just place a trade, or even when I'm looking at an investment, solely on a candlestick signal. It has to confirm a Western signal. We got an email from one of our students. Here was a shooting star. The market rallied the next day, and he sent an email saying, "Oh, the candles don't work." And of course, they're not 100%. But I told him this looks like a great great opportunity to get out of a long trade, or if you want to short, because look, it was confirming a resistance area. When you're selling on this, you have to be comfortable having a stop at above the shooting star. All right. And so, yes, the market rallied next session. Just because it's a bearish signal doesn't mean the market's going to not rally. And okay, this is what happened after. So this is a nice example of east and west. Yes, and thinking about where to set stops. Long upper shadow, you have to be willing to risk to a close above that level. So we briefly look at candles and Western charting techniques. Now let's look at risk reward. Okay, candles and trade management. You could have a wonderful candlestick signal. You could have it confirming 10 of your Western signals, but we always have to take into account trade management. We need the 3 legs for setting up a potential high probability trade or an investment. So risk reward. Okay, when we place a trade, we look for a risk reward of at least 1 to 2, better than that, 1 to 3. What does that mean? It means that we're willing to risk $1 to potentially make $2 or $3. So let's look at an example. All right, so here we have a bearish engulfing pattern. Once again, this could be a green wheel body. In fact, even if the first candle is a doji, this would still be a bearish engulfing pattern. So here it's white and black, but yours might be green and red. Same concept. Remember, open, close, open, close. Obviously, a very dynamic bearish engulfing pattern. The bears really took over. Normally, if it's the black real body and the white real body are about the same size, I don't pay too much attention to it. You really want to see the bears taking over. Or on the flip side, let me show you on the bullish engulfing pattern. We have a little time here, so let me show you. Let me get to the bullish engulfing pattern. Okay. Okay, on the bullish engulfing pattern, we want to see a much bigger white real body than a black real body, all right? And I don't have the shadows here, but all that's important is the real body wraps around the real body. This white real body doesn't have to wrap around the shadows. Okay, so let's get back to where we were, all right? So here's a bearish engulfing pattern, which is a better bear trading signal. And when we talk about bearish candlestick signals, most of us are not going to be shorting on equities, but as we saw before with the options example, candles are great for timing on option trades. Of course, you're always going to look at implied volatility, but candles really shine at letting you know if the trend is changing or not. So let's say you're looking at doing a put, or in Forex, for those of you who trade Forex, you know option, it's really easy to short in the Forex market. So when we talk about a bearish signal, you can either think of it as exiting trades or perhaps doing a bearish trade. So which is a better trading signal? Okay, a bear, which would you prefer, here or here? And the answer is, and I'll give you a hint, you don't know, you have to look at the risk reward. Okay, So here's an example. Here's that bearish engulfing pattern. The bears took over. But if you sell here, again, you know, these are low price stock. But let's imagine this was a, you know, Apple, whatever it is, and you're thinking of doing a put. By the time you got the bearish signal, it would be down here because you need to wait for a close. Okay. That means your risk is here. And my target, candles don't give targets, but I just look at prior lows. My target would be here. So if you're selling it here, your risk is to up here and your target is down here. Same thing now. Here we have that doji. This to me is a much better bearish signal. One, it's confirming resistance. Two, if you sell it here, your stop is up here and my target is no longer here. Okay. My target is the recent low, which actually found support right over here. Okay, this would be my target. So you can't just look at in isolation at the candlestick signal. You have to look at one, if it confirms a Western signal, and just as importantly, how to look at the risk reward. Okay, another very quick example. Okay, this gentleman went long. The market broke above a resistance area here. This was a 3 or 4 minute chart. It broke above a falling resistance line. It held support, right? See the support area here? This is where he bought. And then the market went down. And he wanted to know if this was a good trade or not. Did he make a mistake? Well, he was right. It was a bullish engulfing pattern at support. So the first two legs of the triad were met, a candle signal at support. He forgot about the third leg, all right? Okay, this should be actually a little lower. He bought it over here. His stop should have been under here. And what would the target, what do you think a target should have been? Once again, his target might be up here, but my target would have been up there, right? So yes, he got the candle signal at support, but he forgot about the risk reward. So it was a poor risk reward trade. And that was the one mistake he made on this. Everything else he was right. Good call on the engulfing pattern, good call on the support area, but that was a mistake. And in this brief session, I hope you could see how to use the tools properly. Another cartoon I made up. And what we decided to do is kind of a thank you for having Ken invite us to a special seminar. We're doing a market of your choice webinar. It's February 25th at 5 o'clock. And all you got to do is register. What will happen is you'll click on this link, not here, but when you go to the link, okay, free bonus session. And actually, I forgot to put the link in. So it's candlecharts.com. Let me actually type it in here because we have time. Whoops. Let me just type it in. I can't believe I forgot to put in the link. Okay, let me just add it here. Sorry about that. Okay, so I'm just going to get rid of this here. Okay. www.candlecharts.com. Okay. Okay, my markets. Okay. All right, so that's the link over there. And let me make sure it's the right link. And okay, sorry. And so let me enlarge the slide here. There we go. Okay. So that's the link. You don't have to make a capital over there. And it's my markets. And that's going to be February 25th. And this is the page you'll get to. Okay, you just put in your name. Okay, whoops. Your name, and you get one specific market. And importantly, even if we don't get to your market, we're expecting a lot of requests. Even if we don't get to your market, remember, everything that I'll be doing on that session is applicable to your particular market. All right, so no matter what it is, so it's a great way to have your market analyzed by me. And we're making a recording in case you don't, you can still request your market even if you can't be there, and you'll have access to the recording. So I want to thank you for joining me, and I have a couple of minutes for any questions. So if you have any questions, if you could relay them to me, that would be great. Okay, Ken?
Yeah, we appreciate it. Well, let me tell everyone too. One of the biggest misconceptions I think about working with Steve is that it's not just the chart patterns. And from all the questions I get, they're all about the chart patterns. The most value that I've got from Steve is not the chart patterns, but how to use them in managing risk and evaluating trades in terms of risk reward. For example, I'm all about range. And so I learned that from you, Steve, is how to risk reward. I translate that in a range. So if a chart has a range of say 20 to 24, and it's got a hammer shooting star, that's not nearly as appealing to me as a chart that has a range of say 20 to 30, the hammer
Right.
shooting star. That is how I make a lot of money trading, is knowing that difference. And that's the kind of thing that I got from you, your teaching, Steve, is evaluating relative risk reward. What's the payoff? Is it just, you had an example like 1 versus a 4 type chart. And so range is one thing. It's just a good example, Western application, what you teach. So
And also
like,
check out the, I forgot to mention, we have a President's Day promo, so check that out also. You just click on the link there. So,
Yeah.
you know, for those interested in that. Mhm.
yeah. Does that make sense in terms of range and?
Oh, yeah, I
risk
know.
reward? Yeah.
Yep. You're a big range person. Yep.
Yeah.
Yep. Boy.
And that's
Wide
the kind of
range,
thing.
small range days, sure.
Yeah, so that's why I say learn from Steve, because it's the systematic, the triad, the Western, Eastern, Western, and trade management that makes for successful approaches. And I've learned a lot from you, Steve, and it works. So I could vouch for that. I've tested with thousands of trades. So
Great.
Oh,
Okay, look forward
great.
to seeing many of you getting those requests and seeing my analysis of your particular market. Okay,
Yeah,
thanks for
all right.
inviting me, Ken.
Okay, thanks, Steve. Thanks for being here.
Yeah.
Take care. Bye-bye.
Yeah.
So Mark, are you here?
I think I am. Are you?
Okay. I'm sometimes it's up for debate, but it's I really like your approach of VR trading. I like the whole idea of like buying on high volume on the after a pivot, the right side of the letter V when there's large volume. That actually works. So thanks. It's good to learn from
Well,
you. So
thank you for having me. Thanks. Doing a great job there, Ken.
one try. Well, go ahead and welcome aboard. Mark Leibovit is well known. We see each other at the expos all the time, the money show expos, and he's a noted expert in the field. And great to have you here, man. So thanks for showing up.
Yeah, great. So I have a little PowerPoint here, and I'll see if I can get this activated here. So I got to share my screen, right? So let's
Yeah.
do that. And is that all clear? Do you see that?
Yeah, comes through loud and
Oh,
clear.
cool.
Looks good.
Okay, great. So thank you, Ken. So yeah,
You're welcome.
Ken's being nice to me. I mean, I've known Ken for a long time at money shows and stuff. It's the first opportunity to work with him on his new format. So it's a privilege, and thank you for sending out that email. You have a great group of guys that are offering a lot of great information. So
Well, it's our honor
keep
to have
it,
you here, man. You're one of
keep.
you've been around for a long time as well, and you know your stuff. You really have a lot of value to
No,
add. So thanks.
I'm a survivor, Ken. I'm a survivor.
That's how it feels. Yeah. Yeah.
Yeah, I've been doing this since 1979, so
Wow.
it's dating me my age and everything else. But
Well, it's
yeah,
wisdom and experience is great. So yeah.
well, it's what keeps me going. I don't think I would be lost if I didn't have the markets. It's the
Yeah.
closest thing we have to a crystal ball in life. You know
Yeah.
what I mean?
Very
So
true.
I enjoy just the horses out of the gate in the morning and the action and the forecasts based on, this is what I talk about essentially in the presentation is look, where else can you get a sense of the future? And you get it in the markets, you see the money flows, the new areas of opportunity, and it all translates into real life events and products and stuff. So I don't know how you could exist without tracking the markets. And that's what I've been
Yeah.
doing now for 44 years already. So
And still a
anyway,
thrill. It's still a thrill after all these years. It's amazing to me. I have the world's shortest attention span. After 25 years, I'm still thrilled with the markets to this day. It's fascinating. Yeah.
I'm up in the middle of the night checking the markets. What can I tell you?
We're junkies. Anyway, well, take it
Yeah.
away, Mark. Good to have you here, man. Thanks for.
Yeah, thank you. So anyway, thanks for having me. So basically, this is a very eclectic approach. I'm not teaching a particular indicator, though you're going to see my volume reversal charts in a few moments. This is a tool that I created way back in the 1970s, 80s when I was a floor trader on the Chicago Ford Options Exchange many decades ago. But I've produced all these letters you see on the screen, and you go to vrtrader.com, and there's a promo code up there. You get half off for any of these newsletters. 2022 half off is the promo code. So we'll see this again at the end of the presentation. But we follow, cannabis, silver, gold. I have my blockchain, following the crypto market, metals, and so forth. But my favorite letter, if I had to suggest one for those of you who are new to the service, just platinum, the platinum letter you see in the middle left of the screen. I try to cover everything in that letter. That's your promo code. So this is the year of the snake, and basically the year of the snake says you expect it to bring about transformation and new beginnings. And I guess what we're seeing in the White House right now is a good sense for that. I originally launched the letter July 21st, 1979 as the Volume Reversal Survey. So this is nostalgic, but it was based on my volume work and my little technical tool. So I keep putting this up on the website because it's nostalgia. We call it vrtrader.com now, but that was the original logo going many decades back. 2019 Timer of the Year. I think I was Timer of the Year in 2016 too. This is a little egotistical, but I was an elf on the Louis Rukeyser Wall Street Week program in the late 80s into the mid 90s. And they had a little cartoon at the beginning of the television show where the elves would tell you whether the market was up, down, or neutral. So this is very nostalgic for me, but also a great honor for me to work with Louis for that many years on PBS. Also worked with Paul Kangas, who, as you know, passed away many years ago on the Nightly Business Report. So I'm really proud of my book, The Trader's Book of Volume. It's also available in Chinese. It's published at McGraw-Hill. It's about 400 pages, and it covers what I thought all the major volume indicators. Of course, mine is in there as well, but I would try to get a copy of this. It's even today, it was published back in 2011. We do need to update it, but the basic tools there and looking at all the volume indicators is still as valuable now as then. It's like the McGee and Edwards book. Basic patterns are still there, and that's why we produced it. I'm working on my next book, Trading Your Way to Profits Using the Volume Reversal Indicator. We'll get to that later. Still have to do more work on that, and we're due for an update anyway on the first book. That's my tool. And the big promo I like to make at this moment is our annual forecast model just came out for 2025 in the last couple of weeks. It's 50% off on that. It covers all the major markets, an annual report, and basically Dow, silver, gold, the US dollar, treasury bonds, Bitcoin. So it's like a model for the year. And I originally started this back in 1987 by accident, threw it together, and it called the crash in October of 87. So ever since it did that, I got spoiled, and I figured I should continue to do it every year. And it's based on cycles and seasonal tendencies and all kinds of fun stuff. And I just think it was worth continuing to publish, which we continue to do. So I would encourage you to get a copy of the annual report, and it's available right now on our website at vrtrader.com. It's called the VR Forecaster. So just a little teaser here. This was the 2023 forecast for the Dow Jones. The bars were the prediction, and the little yellow line was the actual results. So it tracked pretty well. This was the annual forecast model for Bitcoin in 2023. The vertical bars were the projection. Again, this is coming out the beginning of the year, and the actual pattern is the yellow line. So more or less, it was pretty on track with the bullish forecast. This was last year's forecast for the Dow Industrials. The bars were what we thought would happen in the months ahead. And again, it's not supposed to be a day trading or short-term trading indicator, but it gave you a good sense of what the pattern should be for the year. So if you go to our forecast model now, you could see this and a bunch of other markets, what the model indicates as the potential for the next several months. So I just want to throw that out. You can see that it had some reliability here, and doing it since 1987, obviously it's got some serious compatibility here with investors because we continue to publish it and sell it. So let's see here, a little more background on myself. I do this weekly podcast on housestreet.com. I put it on the cover of my daily report. If you don't go to housestreet.com and pull up the podcast. In fact, we just did one in the last 30 minutes. It'll be on air tonight, covering the markets. So it's free. And you just go to housestreet.com or just go to my homepage at vrtrader.com and I'll publish it tonight. You'll listen to it's about a 40-minute podcast. We try to cover a whole bunch of stuff. And you're going to see some of the stuff in a moment that I also cover in the podcast, which is not only pure stock market related. There's always something to worry about. I'm sure Ken will confirm this. Looking over the last 20 years, a lot of reasons why you can get bearish on the market and get scared. But we find that ultimately, and I've been doing this as Ken has a long time. You find out no matter how bad things are, for some reason, market always seems to come back. So I guess stay optimistic, big picture. I mean, I know it has there rough periods and real scary times, like with the COVID fiasco and 2020, but we still seem to pull out of it. When I look back when we had the crash and the COVID there, we got down to what 19,800 in the Dow, and we're looking at it there, and here we are over 40,000. So no matter how bad it seems that these bad events are opportunities. I follow another website, which you should as well, gata.org, the Gold Antitrust Action Committee. I've known them, Bill Murphy and them, for about 25 years. I know gold's up, everybody's happy, but they've been documenting gold manipulation for the last couple of decades, and maybe governments are not manipulating as much now as they used to, but it's something you should be aware of. I also talk about the plunge protection team in my newsletter. You don't hear this on CNBC or any of the major broadcasts, but Ronald Reagan created this back in 1988. He called it the Working Group of Financial Markets. And I'm a strong, believer. I guess if we got Freedom of Information Act out there, we could see what the government's doing in the markets. We know Japan, for example, pretty much controls their financial markets, individual stocks and ETFs, and I'm sure there's a big component here in the U.S. So it doesn't affect your day-to-day trading or investing, but you should be aware about that. There's also the Equity Stabilization Fund created back in 1934. Government's very active in this as well in terms of their involvement in the markets, not just treasury bonds and gold, but physical stocks. In fact, the Freedom of Information Act a few years ago actually showed the Fed was putting money into Harley Davidson stock or bonds, which was a shock when I read this in the Freedom of Information report. You wonder, what's the Fed doing in individual stocks when they're supposed to be talking about interest rates and money supply? So there's a lot of questions about that. We'll go on to that in a second. I just want to show you this other visual here regarding Ron Paul. He just introduced a bill in Congress. This is Rand Paul, the current senator, about auditing the Fed and getting more disclosure about what they're really doing there. So, the big book, of course, is The Creature from Jekyll Island. I'm sure all of you have heard about it. Even Mohammed Arian said it's harder to justify the independent Fed. So I'm in the abolish the Fed group, just to let you know. I mean, I just think it's outdated. They made a lot of mistakes. Even Ben Bernanke, back in 2008, came out with a quote saying that, yes, we did it. And he said that part of the Great Depression was attributable to the Fed. In fact, the Fed had raised interest rates during the Great Depression and probably made it a lot worse than it could have been. And he admitted that in an interview on CBS television. So big changes hopefully are ahead for the Fed as well. I know a lot of things are going on in Washington right now, but I just want to bring that out to you. So I went ahead here with the visuals. Fear and Greed Index, we all track that on CNN. I don't know how good it is, but that's where it is tonight. People are fearful here, so it's probably time that maybe a little bit more of a pullback, but a buying opportunity. It's a story with tariffs. Tariffs, a lot of controversy about it, but even Abraham Lincoln was in favor of protective tariffs, and it started way back with Hamilton. Buffett indicator, as you know, is not very happy about the market, says that we're, overvalued here. It's a ratio of market capitalization to GDP, and it's at a high number now. It's 120%. suggesting the market is way overvalued here. So it's been overvalued for a while, but Warren's got a terrific track record. So if we do have a bit of a correction, it wouldn't surprise Warren Buffett, that's for sure. Let's see, that's a blow up of that same visual from the Warren Buffett slide that I just showed you. On the other hand, there's a confident index. Very few people track this or aware of this, but it's the ratio of the Fidelity Capital Income Fund to the Vanguard Long-Term Treasury Bond Fund. And the confidence index is basically saying we're still in an uptrend, despite all the negative news and the risk of all the things that are going on in the world. And this has been since 2020 with various zigs and zags. Overall confidence is still up. So that suggests that the bull market overall is not over. And until you see this trend zigzagging down or a break below that blue line, which is basically a 120-day, I think 140-day moving average, we're probably still okay. So let's see if that continues to hold. Hopefully it will. But I put this in my newsletter just about every couple of days. All familiar with Yale Hirsch, good friend of mine many years ago. In fact, one of the reasons I'm in the stock market today, back in 1987, he dedicated his new book, the annual book, the Stock Traders Almanac, and he mentioned four technical analysts, I being one of them, and calling us the new prognosticators. So the fact he had mentioned me in the acknowledgments of his 1987 Stock Traders Almanac was a great personal honor, and also said, gee, I must have some sense of the market if someone as great as Yale Hirsch would give me that credit. So I've been indebted to him. He passed away a few years ago, but his son Jeff continues to run the Stock Traders Almanac. But anyway, the point of this slide is a January barometer. The month of January was up compared to December close, and that says for the year we should be okay. The first 5 days were a little wishy-washy. There's an early warning system that Yale had created, but the annual system is based on the close of January. So Yale's indicator is still positive for 2025, assuming it has about a 70% reliability. Shadow government statistics. I follow this carefully. I don't believe the government statistics that come out, the Bureau of Labor Statistics and all that stuff. Very skeptical about it. As you know, they revise them, and we found a lot of errors, but you need to really check to see what the real numbers are. And this is a good source to try to get a real sense of what's going on out there versus the government reports. I do enjoy the industry reports, like the ones that come out of the Chicago reports, that the ones that are industry generated, I believe, and I already covered the creature from Jekyll Island, so I don't want to go over that again. Jerome Powell says he won't resign if Trump tries to remove him. Well, who knows? We'll see what'll happen there, but I'm sure Trump's going to put some pressure on him because he wants lower interest rates. We'll see how all that plays out. I'm a contrarian on the financial media. The financial media is not too happy with me. This is going way back, folks, so this is dating me here a little bit, but this was the day the NASDAQ topped out on March 10th in the year 2000. So this is 24 years ago, but the day, as you can see where the NASDAQ is now compared to where it was then, but the day it topped out, the Wall Street Journal had this bull flexing its muscles the day of the high. So that worries me when the financial press is, bullish. It tends to be bullish at tops and bearish at bottom. So I have pages and pages of documentation about the media mistiming the market, and it becomes a good contrary indicator if you're a strategist and trying to get a sense of direction. And even this past year, Barron's had this cover story. This was about almost a year ago. It says bet on the bull, and this was ahead of a correction. And it was within a month, I think, when Nvidia had that first big trading top before it corrected and then came back again. But when I see Barron's or Wall Street Journal coming out with cover stories, all articles have been written about the cover stories in the press. You have to fade them. So this is something that I pay a lot of attention to, what you're hearing in the media. You got to do your own work. You got to look at this. You got to look at your charts. But, the last thing you want to do is bet on what the media is telling you, I think. Chicago PMI I just mentioned a few moments ago, industry-related statistics. I have a lot of confidence for, not government-related statistics. And unfortunately, the Chicago PMI has not been performing very well in terms of forecasts for recession or, the economy. So we have to hope that turns around a bit. There was a little bit of an uptick, but it's been, negative in recent months, as you know. For those of you who don't really follow me, you're probably in for a surprise because I look at a lot of stuff, including my volume indicator, which we'll get to in just a moment. Geocosmic stuff, very influential to me when I was a floor trader on the CBOE. This is going way back now. What was that already? It's in 1973 or 74. A financial astrologer came up to me and said, look at the tape at noon, the market's going to change direction. And I laughed at him. I thought he was crazy. And exactly at noon, based on what his analysis was related to the moon or nodes of the moon or whatever it was at the time, the market absolutely switched direction. So I became very friendly with a lot of financial astrologers. Arch Crawford, one of my good friends, and others. Ray Merriman, who lives down in here in Phoenix, used to be out in Farmington, Michigan. Just terrific guys, but there's something there, and you can't just laugh it off. There is a correlation. So I always check my charts against the geocosmic. For example, seasonal patterns. Very few people even talk about this, but the market tends to change direction many times around the major seasons. The most classic example is the vernal equinox, which is coming up now next month. If you remember the COVID low in 2020, it was exactly the day of the vernal equinox. That's when it bottomed after the big crash. So you got to watch these dates. Within a week or so of each of these dates, the markets often change direction. And people say, what's the seasons have to do with anything? Well, I think they do, and that they have influence on us, and those powers out there, planetary and otherwise, and you just got to pay attention to these dates. The lunar cycles. I think Louis Rukeyser had Ian McAvity from a letter called Deliberations. He set up Toronto on the Wall Street Week television program in 1974, and he said that you can chart the gold against the full moon, and there would be correlations there. You get highs and so forth. So that influenced me. And ever since the 1970s, I've been tracking lunar cycles against the market. In fact, we just had a full moon it was on the 12th, which was on Tuesday. And indeed, the market had a little bit of a indigestion there for a day or so. So you got to watch. There's a new moon coming up on February 27th. I found that there is correlations. In fact, this report here, it was put out. This is McClellan put this report out a few years ago, correlating full moons and gold and pointing out, I don't believe it's full moons. I think it's any lunar cycle can change direction of markets or be coincident with highs or lows in markets. But McClellan put this out a few years ago and sort of supports what Ian McAvity was saying back in the 70s and what I've noticed over the decades. So I track the lunar cycles and the seasonals along with the stock charts. If you're overbought coming into a lunar cycle, for example, or oversold, you want to pay attention to that because often there is a correlation and it's not our imagination. What I enjoy is the fact that it's not really covered in the financial press. It's something we talk about among us technicians sort of privately, though it may be gaining some more exposure now. But I always look to see where we are in the short-term cycles. Groundhog Day, people laugh at Groundhog. Well, there tends to be some volatility around the Groundhog Day, February 2nd. And I was writing about this, for the last several years, but just before, if you recall what happened on Groundhog Day, we had that big washout in the stock market, based on the AI story out of China. And I warned, watch out around the Groundhog Day. Every year around February 2nd, it's not the groundhog, it's the cycles that come in around that time. And there's a whole history, and there's an article in my newsletter going back hundreds of years why we celebrate Groundhog Day. There's actually planetary cycles and seasonal cycles that come in and about that day, and they do have their effects on the market. So people laugh at it. I also pay attention to the solar flares. I put this out in the newsletter. Obviously, I have no control of what happens on the sun, but history says back in 1859, we had what was known as the Carrington event, which was the most intense geomagnetic storm history at that point. It knocked out the telegraph, which is the only technology we had at the time. And if you remember, just in the recent months, we had big solar activity and affected many of the Starlink, Elon Musk's satellites. So there's a website you can go to, spaceweather.com, And you know, I track just nothing that we can do about it. It's good to have that information, and we're getting mostly auroras and stuff like that now. But if there's ever a super event like this Carrington event, unfortunately, it can wipe out, you know, civilization here in a certain sense by knocking out satellites and technology. So I track stuff like that. Um, this is getting off a little bit here, but NASA's, you know, doing a lot of work on asteroids and stuff, mining potentially asteroids for precious metals. So I just enjoy that article. It's something you might want to read about, and it's something that's probably coming, if not already underway. So let's get into some of my technical charts here really quick so you can see that I'm not only looking at alternate indicators. The main indicator I like to talk about, of course, is my little volume reversal tool, which is the basis of most of my trading. And the tool, by the way, is only available on Metastock at the moment. It used to be on eSignal and TradeStation, but they no longer offer add-on indicators. So you have to go to Metastock to sign up for it. But I'm going to show you some examples here and some charts of the way I, look at the markets. And if I'm looking at the pure charts. So, for example, if I had this is sort of a skeleton chart, if I see volume coming into the upside or downside, it flashes with a little VR on the screen. So let's get on to some examples here. So here we're looking at Nucor, which obviously has some impact here with the U.S. Steel story and everything else. But I just want to get you a sense of what I look at in terms of a chart. And I got about 10 examples here, and I am talking fast, but this is only available to me on my system, or if you go to Metastock. So when you're looking at a screen here and you see a little negative arrow, down arrow, that means I've got a negative volume reversal, and that tells me I'm a seller. So what is a negative volume reversal? Well, it's basically a down day on increasing volume coming off of a peak. But it's that shift in volume, which is the key for me from a trading perspective. And obviously not every volume reversal is going to be 100%, but I would say the correlation is probably 75 or 80%. And I've used this now for decades. So this gives me like a trading sell signal. And when I say a trading sell signal, if I'm getting a signal like here, -1, I usually keep a stop just at the high prior to that signal. It was telling me sellers came right off the top, and that becomes my trading signal to take a position. And I found that, you get usually a 2-3 day move in that direction of the volume, if not more. And of course, we're looking here at a weekly chart. So this is a weekly signal in Nucor, and obviously it affected the market before that, more than just for, 1 week in this particular instance. And you can see when a positive volume reversal came in, you had a 2-3 week rally and so forth. And just here in the last 3 or 4 weeks, we've had a positive ER. It may have been anticipating the tariffs or reason, but there's been, a lot of talk about that. But in any event, just looking at the pure signal that got you long Nucor. So just a quick example of one of the trades that I made here, and what triggered it. This is USO monthly. This is your crude oil. And I put the monthly up chart first. I misspelled monthly here at the top, so that was pretty dumb of me. I just noticed that. For months, a lot of negative ERs on the monthly chart, so it's not very positive on crude oil, and I'm more bearish than bullish for that reason and other reasons. But this is the weekly chart. Here is the monthly chart. But in any event, most of the VRs that I'm seeing, as you can see, are negatives. I don't see really any positives here for many weeks back. And I think much has to do with opening the spigot, so to speak, on crude oil with the Trump administration and so forth. And I would bet there could be a Mideast event, and we had a little correction here to the downside, and I guess you can get a bounce. But I wouldn't be surprised to see crude oil much lower here over the next year or two. Potentially even into the $50 a barrel level, much lower than it is now. Based on what Trump's doing and also what you're seeing in the charts. Not to say the individual companies like Exxon or Chevron or others can still make money, and many of these oil companies still make money, but they're able to still profit regardless of the price of crude oil, though obviously a higher price helps them. But this little chart is telling me, except for a bounce, I think we're going lower. Boiled is the bullish ETF for natural gas. Now, it's funny because what I'm saying here, it might sound a little contradictory, but the chart in natural gas is bullish, where the crude oil tends to be more bearish, and this is, with daily chart of oil. In fact, it had a nice little run, a little higher. This is a chart from yesterday, went higher today before it sold off. But I think um, natural gas is so cheap to compare to where it's been, and the rush into nuclear time, and natural gas could be a short-term substitute for that. So I think oil is telling you that. This is a leveraged ETF though to the long side. So the other way to play it is UNG, which is of course the basic one. This is one I trade more often. But if you look at the chart, you can see mostly positive VRs, little green arrows here. And this is a daily chart going back, for the next month or so. So yes, we get little moves, but I think crude oil is more down and natural gas more up. That's the way I'm interpreting the markets here. So everything is tradable, doesn't go up every day, but I would be surprised if natural gas makes more of a move here in the near term. Okay. Got to put a Tesla chart up, Ken. Everybody's interested in Tesla, so got to throw that up there. This is a daily chart. You can see here, we had a nice little bounce yesterday and today, and Tesla. I didn't get a positive volume reversal, but you can see the negative ERs worked pretty well here as it was coming down, and positive it was going up, and negative it's going down. And this is a daily chart, by the way. So there have been some pretty decent trading signals in Tesla. You can trade TSLL, which is the tracking stock for it, obviously, because this is an expensive stock, but good overall, good reliability on the signals. I think there's maybe one questionable signal in here where it went positive and then it went negative the next day. But this said volume was to the upside, volume to the downside. And now we had a bounce here and then it got way oversold. So, Tesla had a couple good days, but the signal gave you a nice trade here, at least for, 4 or 5 days, telling you that Tesla will be under some pressure. So the R signal was very important to me for my short-term trading. Got to put up Disney on the screen. It's one of my favorite stocks. I've traded it for decades. Is a gap back here about 103. I'm hoping they eventually fill that. Stock again responds nicely to the volume signals. That's why I'm putting it up here. This is a daily chart. You can see how it's been in a downtrend for many days. A negative volume reversal pointing it lower. You got a 1-day positive here where it bounced. Nice positive here for a little move for a few days, and then a negative came in again. So on a trading basis, the way I use it, if I'm trading Disney and I get a positive VR as I did here, I think it's going to get a bounce for a couple of days, if not more, and I jump in and I keep a stop just at the low prior to where the positive volume reversal came in, and that becomes my little trading setup, so to speak. And that's sort of the way I play it. So there's a whole theory out there how you should trade one stock or trade a couple markets that you're really close to, and don't be all over the place. And I'm sort of guilty of that with this particular stock for many years, where I had a lot of luck with the signals. Like, look, this is a signal here way back here. This is going back, several months back. This is, I think, before they had this may have been around the time where the talk of buyout or board seat change was coming in, but there was a nice positive volume reversal. Then there's an explosion of 20 points within 4 days after that positive volume reversal came in. And that really spoils you, as I've been with the stock, that the signals tend to be, pretty good. So I'm moving on, but this is one of my favorites for trading. Let's see here. And what do we have here? This is a Bitcoin GBTC. I'm a big bull on crypto and the Bitcoin, but as you can see here, at least in the last, looking at here, this is the last month or two, a lot of negative VRs in the Bitcoin GBTC. So, I know there's a lot of people who think it's going to $1 million, and some are predicting $250,000. And I'm looking at a gap back
Hey, Mark,
here that could
just
be.
great
I'm sorry.
presentation. Great presentation. I was going to say your time's up, so I wanted to ask if we could wrap up their half-hour presentation. So
Okay, I'm
everyone gets
sorry.
30
I
minutes.
talked. Ken, I apologize for talking too much. Sorry.
No, it's a great presentation. I really enjoyed it. I trade some of the same things. I like Disney. I trade Boyle and UNG. There's another one. I think it's K Web something. It's the opposite natural gas, and yeah. So we trade some of the same markets too. So I'd like to hear your presentation.
Well, no, thank you. I just had a few more charts, but that's like, I was just about at the tail end of it anyway. So yeah, this is the newsletters. Thanks for having me, and take advantage of that promo code if you're interested in signing up. And thank you again.
Well, yeah, sure thing. It's a what's the offer? Let's hear the offer.
Yes, it's 50% off any of the newsletters using that
Mhm.
2022 half off promo code when you go to the website, including
But which
our,
one would you recommend, say, for stock swing traders?
I would take the platinum letter because
Okay.
that covers all the markets. Ken, that's the one that I put, I throw a little bit of everything into the
Yeah.
platinum letter.
You
Okay.
work hard. You put out all those newsletters. Oh, you work hard then. Yeah, it's a
Workaholic, what can I tell you?
you and me both. Yeah, it's so good to see you again, man. It's been like what 5 years since I think it was Vegas or something, right? The VIP room for the
Well, thank you for the invitation. Just a way to get caught up. We got to do it on videos versus at money shows, right?
right, yeah. Yeah, we're always welcome to come back. So we'll see you again.
Thank you. Have a
Okay,
great
thanks,
evening.
Mark. You too.
Thanks,
Take care. Thanks
thanks
very much.
everyone. Bye-bye. Take care.
Thanks, traders. Yeah. Yeah. So traders, what do you think? I really enjoyed today's session. It's one of the best. How do you guys like this 30-minute per person format? Well, what do you think? Do you like it? I think it's much better than hour-long presentations, but traders, speak now in the chat if you would. Do you like the 30-minute format? And what do you think about the session today? Let me see. I'm going to wrap up here soon. Great. Okay. Thanks, Don. What do you guys think? Was the 30-minute format good? I really enjoyed it because I'm not patient enough to listen to anyone for an hour. Even myself, I got a short attention span. But 30 minutes, it gives people a good chance to discuss what they teach, how they work, and how you can work with them. And it's really a pleasure to have so many good faces here today. So I think that's going to be about it. What else? I want to go back to the charts here for just a second. And let me share with you just one last tip. Okay, one last tip for the road. Hit the road, Jack. Don't you come back no more. Don't trade inside days. Don't trade inside charts. I guarantee you, and I would bet I bet a lot of money. I like to bet. It's what I do. If you go back over your last 20 stop losses, I'll guarantee you that over 2/3 of them will be because you initiated the trade when it was inside the previous day's range. So what I'm saying is like only buy gaps or only buy breakouts at new highs. For example, if we look at the 1 minute chart here, and this is good. I mean, I've tested this out in genuinely millions of dollars worth of trades. That's the truth. You want to focus your energy on charts that are trading above the previous day's high. So if the previous day's range looks like this, thou shalt not trade or initiate a trade or buy the stock when it's inside the previous day's high low. Okay, you have OHLC, open, high, low, close. The H low, right? And the reason is because that's where institutional volume comes in, is above PDHs and PDLs. I mean, I've worked with quants on Wall Street. I know this. I'm a statistician. I'm a math guy. The Boolean algorithms kick in sequentially when you're outside the previous day's range. So do not trade inside previous day's range. Only buy when something's above the previous day's high. Okay, that's a good quick tip. So that's gonna be about it for me. I just wanted to wrap up by thanking you all for being here and thanking all my presenters. And my pitch was for the best offer I've ever offered the industry for a week. And I'm not going to extend the deadline. I'm not going to repeat the offer. This is one off only. You can get the stock trading success system that the Stocks and Commodities magazine said you have learned enough to trade for a living. And you can get a year of my live trading room. And we open range breakouts only, where I'm only there for like until 10:15 because I trade the open, then I walk away. That's how I trade them. To get the system from Steve Nison and myself, it's long in tooth, but well worth it. It's one of the best, if not the best course in the industry. And all this kind of stuff. So that's at Day Trading University /success. And we want to thank y'all for being here and thank all of our great speakers for the value that they brought today to share with you our lessons learned, and hope that you work with them. And they're all good people. I mean, I wouldn't have them here if they weren't. So I don't work with shysters. I work with genuine experts who can actually really help you guys. And I do the best job I can to vet those people so that I only have real valuable people because, who I bring, it reflects on me, right? So I want to bring people that I'm proud to work with that I've learned from personally, which I have. So take care. And I'll see you guys in our next event in March sometime. So thanks, Don. Appreciate that, man. So take care and trade well, trade smart, be good out there. And let's make this work. All right. Take care, everyone. and best wishes for success in your trades as we move forward. Bye for now. And I will get the I'll get the video recording of this up on my YouTube channel. Hey, by the way, if you want to see a real badass video, watch me playing tenor sax, Pink Panther. I produced a really good music video. Just go to YouTube and look up keywords Pink Panther, Ken Calhoun, tenor sax. I'm sitting there blowing up tenor sax, so it's kind of fun. Well, take care, and I'm out. Bye for now. And make lots of money.